And the Fed wraps up its first meeting of 2021 today. Chairman Jerome Powell is likely to be cautious about tapering asset purchases. Matt?
All right, let's take a look at futures this morning. A little bit of a choppy picture in terms of European futures. We have CAC futures right now rising, but DAX futures are down 0.3%, and FTSE futures are off more than 0.5% this morning. We also see a mixed picture in terms of U.S. futures. So tech futures are higher, with the NASDAQ futures up 0.5%. Dow Jones futures are down 0.2%. Here is the global macro movers screen. You can see the equity indexes in the far left-hand column, and it will populate as they open live. The FTSE, as usual, the first out of the gate and down about 0.3%, but moving lower as I speak. So it looks like we're definitely getting disappointing open in London. Here you can see now the DAX has opened up, also down 0.3%. The IBEX down 0.3%. The CAC, even after posting a plus in futures, down 0.1%. European equity markets just generally opening down. There has been a lot of speculation, of course, around a market bubble. Almost all of the most read stories over the past few days have been in one way or another about that. And then the most read issue has been GameStop. In the U.S., the value of that brick and mortar video game retailer passed $10 billion, with shares nearly doubling. That comes after big investors like Elon Musk name-checked the stock. Also, Chamath Palihapitiya said he was buying the options, pushing Reddit owners Reddit users, I should say, to buy the stock, to become owners, to pump the shares, to hold the stock, not to sell it, to call in their shorts, et cetera, et cetera. It's a big army of retail investors against gigantic Wall Street hedge funds, many of whom are now seeing their long positions hit as well as their short positions. It's almost a social justice movement as well as a greedy scheme to get rich. Joining us now is William Hobbs, Barclays Wealth Management CIO. And Will, I don't mean to paint the idea of greedy people trying to get rich in a bad light, of course. That's what Wall Street in a lot of ways is about. But it hasn't ever worked exactly like this, where people just don't seem to care about the fundamentals at all. What do you make of the push behind GameStop and the liquidity that makes it possible?
Gosh, Matt, yeah, it's an interesting question. I mean, I think, when we talk about bubbles in markets, I mean, first things first is, fundamentals will always assert themselves eventually. It's just a matter of time. You can't escape from cash flows and profits. They have to, there has to be a truth to the forecasts eventually. And a lot of these companies, they're just based, I think, one of the things that I think we're seeing in markets at the moment, which is really interesting, is people are extrapolating what our lives, or what of the changes to our working lives, and social lives and every part of our existence that we're seeing in this pandemic, what if those changes will survive until that post-pandemic world? And to be honest, I think we've got to be a little bit more humble than many are being at the moment. We know much less about that world than we think we know. Some are arguing that we're sort of just tapping into the limitless potential of digital communications. You could conversely argue that we're actually discovering some of its limitations, that actually, much of the human experience cannot be replicated online. So we want to be very wary of assuming that what's happened during this pandemic will change, will endure, and to that extent, you want to be quite wary of some of those sort of cash flow assumptions that some parts of the tech sector are currently thriving on.
And William, good morning to you. Let me ask you though, in terms, this is just one story. It's quite fascinating. It seems to be pushing up the stocks that hedge funds like in various parts of the world and the stocks that hedge funds like to not like. What does this have broader implications though for you, or is it a sign of how much liquidity there is in markets? Are you concerned about bubbles appearing either in these kind of names or just broadly in markets? Are you concerned about bubbles at this point?
Well, yeah, I think generally, the proximity of two of the most famous, big-time market bubbles, the 2000 TMT and subprime, is probably leading us to exaggerate how regularly they occur. If you look over the last 350 years, you can really name, 10 or so mega bubbles. So the big ones tend to be a bit rarer. And most of the time, there's a really interesting study from a guy called, Yale professor, Goetzman, who did a study of sort of the evolution of stock prices and showed quite amazingly that actually a doubling of a stock market tends to be followed by another year of decent gains rather than a sort of an immediate sort of assumption of a reversion to some sort of lower mean. And the point there is that what looks like exuberance to the hard-nosed investor often just is a change in the underlying technology. Markets are mostly right about this stuff. However, and it's an important point, I think if you look at some of those sort of mega cap names in the US, what you can say, I wouldn't use the word bubble, but I would say that the cash flow assumptions you need to make in order to make them work, the current prices work, leave very little margin for error. And I think what you are finding, we're seeing, build up of antitrust risk, overseas digital taxation threat. So, the risk in those big names has possibly increased a little bit, but I think that's a long way from calling it a bubble.
We put together a chart that we normally wouldn't be allowed to show, but Hillary is out today. So let's go ahead and bring that up. Dobriana built it for us. Anna pointed it out from a Bloomberg story. And what it shows is that your typical recovery from a recession is not maybe what we... No, that's not it. I'm talking about the recovery chart, the S&P recovering from PMI lows. Yeah, Hillary loves this one. It's just one line. I want one that looks like spaghetti, so I have to walk Will through it. We have a chart that shows, from the low point in PMIs, you could see, like the white line here, the recovery from 98 to 2001, a big jump in the S&P 500. You could also see a drop like you did in 2001 and 2004. The blue line going across the middle is the average S&P recovery from recession as measured by the PMI bottom. And we're not that far off the average here. So while it feels frothy and it feels absolutely bubblicious, and we write a lot of stories about that, it doesn't seem incredibly out of the ordinary, Will, but will to a new trading generation, right? The kids on Reddit who pretend not to be dads and baby boomers, they really seem like they are when you read through their posts. They won't have experienced this kind of recovery. Do you think that, does it feel normal to you, to old people like us?
Old people. I've never felt older, I have to say, Matt. But the point here is I think recession is a less useful term than is often advertised. There's so much variety. I'm a economic historian obsessive, and I study that. That's most of my sort of studying spare time and professional time. And the differences between recessions are more important and more informative sometimes than the common description. And the point about this one is, if you think about most recessions, they come about because the parts of the global economy have been misbehaving in one way or other, or have got out of shape. And so recessions come along, that's sort of like that strict headmaster to come and get you back into shape. But what that means, you look at the last cycle, for instance, the build-up to the GFC, you had a build-up in subprime, took about a decade. And what that meant was that when you came to the recovery after that gigantic global economic heart attack, you had a lot of homework to do. You had a large stock of unsold homes to chew through. You had a global financial system to substantially reorganize. But this recession is different in a sense because it was imposed on the economy to a certain extent by the pandemic and the measures that were implemented and the risk appetite, the effects on risk appetite. So in a sense, the world economy was reasonably healthy going into this recession. And that means less homework on the way out, potentially. And so it's quite a different looking recovery. And also the big thing from this, the big difference in this economic cycle, I think, looking forward, is the different academic consensus feeding into the government spending plans. The previous cycle, it was the Reinhardt-Rogoff consensus. Debt to GDP above 80% will be deleterious to your long-term growth prospects. This time, it's Summers and Furman telling us that actually you should tune out debt to GDP. It's not an apples for apples comparison. You need to focus on debt servicing. And actually, the reverse is true. If you don't spend, you're a mug.
So this time could be a little bit different. Will, we're going to continue talking about that. Will Hobbs, Barclays Wealth Management CIO. I just want to point out to those viewers that I may confuse. I call out a lot of names on this program because there's so many people behind the scenes that help us build it. It takes a village to raise a child, and we have that in Dobriana, of course, Hillary, my old producer, who is not very old, Sebastian, Laura, Alice, Isaac Munoz, George Shankar of Hammerhead Investments, all these people together, and we need to make the program. And occasionally, although I know it's kind of inside baseball, I like to just shout out the names,
Occasionally you do. And some people might like that. Some of them don't. Maybe we'll check with the team just to verify. But good to explain that, Matt. Thank you very much. Now, coming up on the program, global cases pass 100 million. Back to much more serious stuff. The UK becomes the first nation in Europe with 100,000 deaths from the coronavirus. The latest on the virus and the vaccines next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open right now, 13 minutes into the session. You can see some light red arrows there on the board. The FTSE down 0.25%, the DAX down 1/3%, but the CAC 40 in Paris up 0.1%. So a little bit of a mixed trading picture. I want to show you some of the stocks that Melvin Capital is shorting. This is Gabe Plotkin's hedge fund, which initially was taken down by essentially Reddit and Twitter retail investors who are shorting his GameStop position. They continue to do that, and the movement in GameStop is amazing. But take a look at, since he's been bailed out by Ken Griffin at Citadel and Steve Cohen at 0.72, we're looking at some of his other short positions. Evotech, Varta, and CD Projekt. He's also short those, and as a result, it looks like everybody wants to get in on this in some way, and they're bidding up those stocks. The question is, how long can you stay solvent when you have big billionaire friends? Maybe a little bit longer than others, but when you're a massive horde of retail investors, you can outweigh that, as we are seeing. Now, global coronavirus cases have surpassed 100 million, according to data compiled by Johns Hopkins University. Meanwhile, the UK became the first nation in Europe with 100,000 deaths. Let's discuss vaccines with our guest, William Hobbs, Barclays Wealth Management CIO. Will, it does look like the UK, this is obviously a tragic number, and it's a very large number. 100,000 people in Great Britain have died from the coronavirus. But it does look like the UK is doing quite well at rolling out the vaccine. Are you concerned about the hiccups that we've seen around the European rollout?
Well, Matt, I think we were sort of worried that people were assuming too much in the vaccine rollout globally, that these things it's an incredible, difficult logistical, operation. There are always going to be slip-ups, and it does seem like Europe is now accelerating again, which is great news. And you're seeing that in the US too, and around the world. And what we need really is, that to continue. But I think, from a market's perspective, and remember, this is a cold-hearted, necessarily so, calculation. I'm not sure that the sort of difference in terms of, reaching herd immunity in Q3 or Q4 is going to make a massive difference in terms of market pricing. Because remember, the price of these stocks or indices is a function of all of their future cash flows discounted back to a present rate. The chip that you take out of those cash flows from a slightly delayed arrival at herd immunity is probably not that substantial. It's not going to be a instrumental in, or shouldn't be instrumental in whether you buy or sell stocks more generally. But certainly as a person who lives on this planet, we need to reach herd immunity as soon as possible, and we hope that the vaccinations continue to accelerate as they have been in the last couple of weeks.
Will, thank you very much for joining us this morning. William Hobbs, Barclays Wealth Management CIO. Thanks very much for speaking to us here on Bloomberg TV. And Will be continuing his conversation with us on Bloomberg, but on Bloomberg Radio at 9 a.m. UK time. Matt and I will be heading there at the top of the hour. Coming up here on the programme, Impost delivers. The Polish parcel locker firm soars in Amsterdam on its trading debut. We'll be speaking to the company's CEO next. This is Bloomberg. welcome back to the European Market Open. Just coming up to 20 minutes into our trading session, and European equity markets fairly flat, down 0.1%, but that hides some variation. Luxury stocks in focus in Paris. We have the CAC 40 up by 0.3%, the Xetra DAX down by a similar margin. We showed you just before going to break some of the stocks that Melvin Capital is shorting, this in connection with the GameStop story, of course, and so we continue to monitor that. And here in Europe, some of the shorts there are on the move this morning, so that story continues. Now let's get to our next conversation. InPost is soaring on its trading debut in Amsterdam. That's after shareholders of the Polish parcel locker provider raised 2.8 billion euros in the company's IPO. InPost has seen its business bolstered by an online shopping boom set off by lockdowns. Joining us now, I'm pleased to say, is Rafał Brzoska, who is the InPost CEO. Rafał, very good to speak to you, and congratulations on the IPO. You must be pleased, I'm sure. I wonder if you can give us your broad thinking, though, on whether the performance we've seen of InPost during the pandemic is sustainable on the other side of the pandemic.
Hi, good morning. Yeah, so my view is that definitely this will be sustainable. We see a huge shift in the consumer behavior, and actually, it will remain with us. That said, we actually envisage that the acceleration of the e-commerce online penetration is actually be very sustainable. And, my view is that within 5, 6, maybe 7 years, we'll see 50-50 split in terms of online penetration versus the traditional retail business.
So, Rafał, Matt Miller here in Berlin. What do you intend to do with the proceeds here, and how much do you need to invest to get to the place where you want to be with InPost locations?
Yeah, so that was just a secondary offer. We as company, we are very profitable, and we invest into growth. We have plans to expand and replicate actually our very successful business from Poland to UK, France, Spain, and Italy. And that will be fully financed thanks to our own resources and cash generation that we have ability creating such an amazing business in Poland.
Let me ask you about the valuation that we're seeing here. You were delisted in Warsaw some time ago, or removed from there, and you've come back with a very different pricing structure. Do you think that is justified? What has changed so much in 3 years that this much higher price is now justified?
So actually, the listing was done by Advent International, and actually fund has invested massively into company's development. So this is a completely different company. Recently, we may say that 5 years ago, it was a logistics company. Today, this is a tech company. We are actually a tech enabler for e-commerce players. We are driving e-commerce revenue, retention, improving their ability to win markets. So this is a completely different story today than it was in the past, and also that's reflected by the valuation. That's at least my comment to what you asked for.
So what is it? I mean, it seems like everybody's a tech company these days. I'm a big fan of mailboxes, etc., the UPS store. What is it that separates your business from a mailboxes, etc.?
Yeah, so we are truly very unique business. Our machines, our APMs, 24/7 access, with very strong convenience, NPS. Our NPS of end consumers is 71%. Our other, let's say, peers or traditional logistics companies, they are on a level of 13. So that works in tandem with mobile app. We have almost 6 million mobile app users that we just brought them to the mobile app within 12 months. And 66% of carbon dioxide emission reduction in urban areas, and nearly 90% in rural areas. So a very strong ESG angle, great experience for the end consumers, and moreover, that comes at better cost advantage than traditional door-to-door. Door-to-door delivery is not a sustainable business anymore, because there are too many parcels being delivered in too many vans to too many houses, and that comes at very high cost. Also, in terms of the environment impact, which is now more and more important for everybody to save our environment.
At least everybody's in at the moment, or a lot of people are in, Rafael. They're staying home, of course, because of the pandemic, which maybe makes things slightly easier in that regard. You talk in your prospectus, you've mentioned the substantial share of your revenue that comes from Allegro, which is another business. We've talked to them based in Warsaw, of course. This is a bit of a risk for your business. What are you trying to do to diversify that revenue?
Actually, I perceive that in a different way. Our friends from Allegro, we have created a very symbiotic relationship. So they are growing thanks to our APMs penetration. Our APMs penetration is also supported by their growth. So I would say differently, two big champions coming from Poland. Allegro, very strong position in Poland, but we as InPost, we want to replicate that business on other markets. And that's, a huge opportunity that we have got in front of us, and we are focused on this. And that's actually also one of the methods how we may actually diversify away from having just more than 99% of the revenue coming from the Polish market. That's our answer, that's our goal, and that's our ambition, and we will deliver that.
All right, Rafael, thanks so much for joining us. Rafael Bajuska, InPost CEO, on the day of the IPO, listing on the AEX at the top of the range for 16 euros a share. Coming up, we're going to speak to the Bank of Israel governor. We'll discuss the economic outlook for Israel and measures to boost growth, as that country has outperformed almost any other in the world in terms of its coronavirus vaccine rollout. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading day. Right now we're looking at, for the most part, red arrows. The DAX is down 0.4%, the biggest loser across the continent. The CAC is gaining 0.2%, the biggest winner. Let's get the Bloomberg First Word News right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. The EU is trying to resolve a standoff with AstraZeneca over vaccine delays. Officials are calling on national governments and the Commission to demand the company meets its commitments. Astra is pushing back, saying its agreement did not specify a number of doses. That's because the EU insisted on getting the vaccine about the same time as the UK, despite ordering it 3 months later. The European Central Bank is studying if differences in policy with the Federal Reserve are boosting the euro. Bloomberg sources tell us policymakers are worried euro strength is depressing inflation already below zero. It could force the central bank to provide more stimulus. Former President Donald Trump looks to be headed for acquittal in his second impeachment trial. Republican Senator Rand Paul tried to declare the proceedings unconstitutional and was blocked by a 55-45 vote. It probably serves as a rough proxy for the eventual verdict and is well short of the 2/3 majority needed to convict. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura writes here in London. Now, Israel is at the forefront of the world's most aggressive vaccination campaign, with more than 30% of the population having received the first dose of the vaccine and 14% having had the second. The country offers an early glimpse of what life might be like as vaccinations become the norm in society. So a really interesting conversation to be had on this and the economic front in Israel. And for that, we turn to our colleague Yusuf Kamel Al-Din, who joins us now with the governor of the Bank of Israel. Yusuf.
Absolutely, Anna. So 47 out of 100 people have gotten the jab. It's an incredible number, with Israel being at the very forefront of rolling out these vaccinations. Let's talk about the policy implications, though. We're now joined by the governor of the Bank of Israel, Amir Yaron. It is great to have you back on the program. I want to get straight into whether the milestones that you've reached in this vaccination rollout have led you to update any of your economic forecasts at all.
Thank you, Yusuf, and thank you to the audience. Yes, our forecasts are better. The fast vaccination in Israel is probably the leader in terms of the rate of vaccination per capita, is definitely giving us a light at the end of the tunnel for this process. We are certainly seeing ourselves towards the second quarter being in almost opening the economy in as much as one can. And this is definitely has uptick our forecast as long as that process continues. Having said that, at the same time, the mutations and the morbidity rates it takes longer to bring them down. And so one cannot be completely complacent about it. Yeah. And enforcement is very important as well.
The major debate right now is around stimulus, around accommodation. As Israel sort of accelerates its recovery from the coronavirus, are you of the view that some of these emergency measures should be wound down sooner rather than later?
So first of all, the Bank of Israel has been at the forefront in terms of saying it's very important to have fiscal support at the early stages, and we've been involved in almost all of them. Right now, and in all of those, we made the distinction that it's important to make them very targeted as opposed to just universal. The current plan is still an incomplete, so I won't go into details on that. But as we are seeing the light at the end of the tunnel, as we're seeing the economy bouncing back, and one has to recognize along all the way, the Israeli economy has shown its dynamic, its agility. We saw the numbers coming out of the summer and early fall better than we expected. That's partly why we are seeing an uptick in our forecasts. Therefore, the emphasis we think should be on growth engines that will only provide even a bigger multiplier into the recovery.
Governor, the shekel, let's talk about that. It's weakened, what, about 5% in the span of 2 weeks. That comes after the central bank decided to step in with an unprecedented FX intervention program. I listened to the folks at the IMF, and they're saying, you know what, these kinds of measures should be limited. Were you caught a little bit by surprise by the scale of the move in the currency markets?
So, first of all, the shekel has appreciated in many ways during 2020 and early 2021, partly due to good reasons, reflecting how people are seeing the Israeli economy as being strong. Large current account surplus, large FDI, buyouts of many high-tech companies. The high-tech sector has shielded the Israeli economy in many ways out of this crisis. And see, these are all good reasons, yet this is a crisis period. A crisis period requires it's a unique crisis. It requires unique measures, strong measures. There's a lot of uncertainty. Even as we're exiting out of it, there are many temporary factors. For example, our imports have shrunk by 16%. Some of them will come back as we're exiting this. So in lieu of this, we opted to, and this announcement that we made about the purchases supposed to provide certainty in a very uncertain environment about our commitment and the scope of doing this. This is consistent with our monetary policy, supporting inflation targeting, and yet taking precautionary measures of possibly over-appreciation that will damage the economy.
Governor, in terms of the economy's resilience, it is dependent on tech, and there's a vigorous debate on the way right now about froth in tech, about the extraordinary developments of the GameStop saga and the potential disruptions that could come from that. Are you concerned at this point about these developments?
I think as a central banker, I'm very careful about talking specifics about the market, but in general, markets are forward-looking. And in many ways, also some of the steps that have been done by central banks as well as the fiscal stimulus allows the market to perhaps look beyond the current situation. First, they provide support to the economy in real sense. They also provide, in many ways, allow the market to overlook the current situation, as I mentioned, and to look into forward-looking as to where the economy will be. And there is a lot of emphasis, as we're seeing, in terms of labor reallocation towards tech. And that's what the market is looking at. And that's the reason for the possible separation.
Just
having said that, I wouldn't exactly want to be in a position saying where it should be at this point.
Governor, just briefly, a question from one of our viewers just came in on the IB. How much weight do you place on calls from the export high-tech sectors that the shekel is too strong? Is the Bank of Israel in a position to address these concerns or not?
The Bank of Israel is independent. At the same time, we always have conversations with all of the members of the economy. Our analysis about our steps encompasses all aspects of the economy. And the steps that I mentioned about the FX takes that into account. And that's true not just about the FX. It's true about all the arsenal of tools. We've done enormous amount of monetary steps along this crisis. It's part of our enlarged arsenal of tools, and these have been partly developed here, but partly also the outcome of where we've seen the need. For example, supporting SMEs. That has been a very, I view them as a vulnerable point, and we've taken many steps to support that. So on the one hand, we have contacts with all of the economy. I think it's important. At the same time, we make our steps according to our professional analysis.
Governor, it's been a real pleasure. Thank you very much for carving out some time in your busy schedule. That is Governor Amir Yaron, of course, from the Bank of Israel. Anna, Matt.
Youssef, thank you very much. Thanks for bringing us that conversation this morning. Youssef Gamal El-Din speaking there to the governor of the Bank of Israel. Coming up on the program, back to the GameStop story. It surged another 41% in aftermarket trading. We discussed the army of Reddit posters who say they are taking on the hedge fund titans. That's next. This is Bloomberg. the European market open, 42 minutes into Wednesday's trading session, actually looking at top level fairly flat, but you can see some real divergence between the DAX, which loses ground, down 0.4%, and some of the luxury names doing okay in Paris. The CAC 40 up by 0.3%. Let's get a Bloomberg Business Flash here with the corporate news story you need to know. Here's Laura Wright.
Thanks, Anna. HSBC is defending itself against accusations it's become a tool of the Chinese authorities. Speaking to UK lawmakers, CEO Noel Quinn says the bank had no option but to close the account of an exiled Hong Kong lawmaker, saying it was driven purely by the need to comply with local laws. The bank says it is troubled by the recent unrest in the city.
If the question was, am I willing to walk away from Hong Kong, the answer is no. We're too committed as an institution through our heritage and our history, and we believe firmly in that the economy and the communities, and we want to continue to help it develop.
Walgreens has named Starbucks executive Roz Brewer as its new CEO. She'll be currently the only black woman leading an S&P 500 company. After bolstering Starbucks sales, Brewer will be charged with turning around the sprawling pharmacy empire. Bloomberg sources say UniCredit is set to appoint Andrea Orcel as its new CEO, replacing Jean-Pierre Mustier, the longtime head of the investment bank at UBS. Orcel started his career at Goldman Sachs before joining Merrill. There he helped arrange the merger of UniCredito and Credito Italiano, creating the bank he is about to lead. That's your Bloomberg Business Flash. Matt, Anna.
All right, Laura, thanks very much. Laura right there in London with your Business Flash. Now, the skyward march in GameStop continues to accelerate. The stock nearly doubled during exchange hours and then rallied another 40% at after-hours trading. In fact, when I look at the German shares, they're up another 100% today. The battle has turned into one of Reddit day traders versus hedge fund heavyweights. Joining us to discuss is Bloomberg's Danny Berger. So, I mean, how much of a problem is this causing billionaire hedge fund investors?
Matt, I think you might even be thinking of Melvin Capital, to be specific. To remind anyone who hasn't been paying attention to this, Reddit has sort of taken this specific Reddit message board forum, specifically has been looking at Melvin Capital. They are a hedge fund that's doubled down on their short bet against GameStop. And Reddit has adopted this mentality of, you know, we're going to take on these hedge fund titans. And because of that, they've bid up these names that Melvin is short, like GameStop. And you can see the most shorted stocks have risen 15% over the past few days. So if you're Melvin Capital or really just any of these hedge funds, all of a sudden you're faced with a higher collateral you need to post to borrow the shares that you're shorting. So we've seen the hedge fund long start to fall, perhaps because they're selling them in order to fund these bets. We also see companies in Europe that Melvin Capital specifically has a short position that they've reported to regulators. Those are rallying as much as 8%. So perhaps they're closing out shorts and other hedge funds are on a squeeze and to maybe fund their U.S. positioning. But either way, around all of these stocks that hedge funds like to short, we're seeing this activity all day. And we're all of a sudden in this weird environment that if you're a hedge fund manager and you publicly come out against a stock, or even if you're a short seller, do you now have this risk that the Reddit army will turn against you? I mean, this is a completely different risk that hedge fund managers are having to deal with. I can't imagine that it's one they're necessarily prepared for.
I wonder if some hedge funds are trying to turn this to their advantage and wonder what they can do with this Reddit army, if they can attract their attention for positive reasons. Danny, I've been fascinated by the legalities of this. Read a great piece by Matt Levine on the Bloomberg. It's funny, it's really long, it's really complicated as to whether this is legal or not. Sum it up for us.
Yeah, in some, it's a complete gray area. It's really unclear. Matt Levine in his piece referred to a case where hedge fund managers were going to get dinner and sharing stock trading ideas. Is that illegal? The SEC said no. Maybe they'll approach this one in the same sort of manner.
All right, Danny, thanks very much. I think it's a fascinating story. I should point out, Gabe Plotkin of Melvin Capital, not a confirmed billionaire, but of course his friends Stephen Cohen and Ken Griffin are, and they were the ones that had to bail him out after the first short squeeze pushed by Wall Street Bets, which is actually attempting a yacht reallocation strategy here, which I thought was pretty funny. Now, it's a bonus bonanza for investment bankers in Asia. Morgan Stanley and Goldman Sachs are leading the pack with total compensation rising by about 20% and 15% respectively. But Goldman CEO David Solomon has seen his pay package shrink. The board has cut his annual compensation 36%. Following the 1MDB bribery scandal. He will earn a mere $17.5 million for the year. Joining us now is Bloomberg's UK finance reporter, Tom Metcalf. So, Tom, why did Solomon's pay get cut? You know, how involved was he in 1MDB?
Yeah, well, he's carrying the can in some ways. He was obviously not CEO entirely during the time, but it did fall under his remit within the investment bank. And it really goes to show the kind of reverberation still coming through from that pretty much unprecedented Justice Department ruling and the huge $5 billion fine that Goldman paid. So yeah, as you say, it's very rare you see pay cuts. You might see kind of sort of future bonuses slapped a bit, but this is a real big slap down. As you say, more than a third of his pay, and given these investment bankers are competitive, he's probably looking quite jealously at some of his rival CEOs.
And what about others in the banking sector then, the sort of more rank and file banker community? How are they doing?
Well, that's the thing. I mean, today, just as we hear his pay has been cut 36%, our folk in Asia are hearing that Morgan Stanley, Goldman are seeing pretty much the biggest bonus bumps among bankers in Asia. So their bank bonuses are up 20% at Morgan Stanley, 15% at Goldman Sachs, and that definitely is even stronger than, say, the folk on the Wall Street desks.
All right, Tom, thanks very much for joining us. We always like to keep up with the big banker pay. Tom Metcalf there from Bloomberg News. He's our UK finance reporter. Coming up, how far will earnings drive tech stocks? Earnings, not Reddit. We're going to put that question to Simon Flint, Bloomberg's emerging market strategist. This is Bloomberg.
by the middle part of this year, we'll get systems back to normal, the vaccination rollouts will continue, and we'll be able to then accelerate our growth in the back half of this year.
We're only safe when everybody is safe, and that's why at AstraZeneca we decided to provide this vaccine to everybody around the world at no profit and as quickly as possible.
We have the tools that we will make COVID like flu. Means that will not disturb neither our lives, social, or the economy.
The light is at the end of the tunnel. We have a political cycle over with, a new administration, an intense focus on getting us through the crisis in terms of what's going on with the rollout of vaccines.
We have some enhanced treatment protocols that most of 2020 we didn't have. We have much more testing availability and rapid testing and more accurate testing, which in most of 2020 we didn't. We have a much better understanding of the virus where in 2020 we didn't.
CEO voices there, some of the CEOs on the vaccine rollout and their optimism for a return to normal as part of the Davos agenda and Bloomberg's year ahead events, both of those taking place this week. Joining us now is Simon Flint, Bloomberg's emerging markets strategist. And it's interesting to look at what's going on in markets at this point. Stocks a little lackluster here in Europe, but the tech rally looks as if it's set to continue stateside. Simon, NASDAQ futures up again, up once again. We sort of thought that come November and the announcement on vaccines and the successes of vaccines, that maybe the tech rally, although not over, might just pause, but we seem to be back to that theme.
Yeah, absolutely. Although I have to say most readers seem to think we're experiencing a bubble. They're saying, look, Tesla's at 200 times PE, so any results that we get tonight won't be enough to justify these sorts of valuations. On the other hand, though, and this is something maybe I would agree with, most other investors or a minority of investors say, look, if you take into account the yield on US Treasuries, corporate credit, those sorts of things, valuations, at least for the markets as a whole, look okay. So the key really here is for US rates to remain low to sustain the stock market rally.
Yeah, absolutely. I mean, it wouldn't be the first time market watchers have called Tesla a bubble or said the PE was ridiculously high. I've been hearing that mantra for years and years and years. Simon, the rates piece is so important. What do you expect from the Fed?
Well, hopefully it's going to be quite quiet, but there are a couple of hawkish risks, I think. The first of them is that since the last FOMC, expectations for fiscal stimulus have increased quite significantly. So there's some risk that that's reflected, at least in what Powell says. Another possible risk is that Powell acknowledges that inflation expectations have gone up significantly. You can see that both on market-based measures and survey-based measures. So those are two risks. The final thing, though, critically to look out for is what he says about this sentence in the Fed statement about substantial further progress, because this is what taper is tied to. He's bound to be asked by some journalists to define that. My guess is he'll leave it fairly vague because they don't have a consensus yet on the committee.
Simon, thank you very much. Thanks for joining us. Simon Flint, Bloomberg's emerging markets strategist, reflections on the market, where we are on tech stocks, the valuations we have there, and a look ahead to the Fed decision. We'll bring you full coverage of all news out of the Federal Reserve a little bit later on this evening. Of course, that is it for the European market open. Surveillance is up next. European equity markets divided but increasingly negative, actually. So Stock 600 down 0.2%. Even the CAC on, where we saw some glimmers of green earlier on in the trading session, now fairly flat this hour. Matt and I are off to Bloomberg Radio. Surveillance, as I say, is here on Bloomberg TV. This is Bloomberg.
The Reddit rally, GameStop's value surges past $10 billion after a name check from Elon Musk builds on momentum from online day traders. Now hedge funds also see their long positions under attack. The UK becomes the first nation in Europe with 100,000 deaths from the coronavirus. Global cases pass 100 million. And AstraZeneca pushes back against the EU. The drug maker says the union must take responsibility for delays to the rollout of the vaccine. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, of course, it's a Fed day. It's the first end of the meeting of 2021, so the market's definitely focused on what Jay Powell will say in terms of future bond buying. So the market's very focused, of course, on what's happening with Reddit and what's happening with GameStop. I have to say, one of my favorite stories, definitely, of 2021. The focus, though, is stocks dipping before the Fed. A lot of earnings coming out of U.S. tech. And, of course, the conclusion of the first Federal Reserve policy meeting of the year will move treasuries and can move a lot of the emerging markets. Now, we have a great guest lineup for you today. We'll shortly be in conversation with the Dutch central banker. He is Klaas Knot. We'll talk to him, of course, about not only some of the things that we're seeing on Euro, but what the ECB will do. And then later in the hour, we speak with Vivian Hunt from McKinsey. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU is trying to resolve a standoff with AstraZeneca over vaccine delays. Officials are calling on national governments and the Commission to demand the company meet its commitments. Astra is pushing back, saying its agreement didn't specify a number of doses. That's because the EU insisted on getting the vaccine about the same time as the UK, despite ordering it 3 months later. Now, global coronavirus cases have exceeded 100 million. The UK is now the first country in Europe with over 100,000 deaths. Fatalities are already 5 times the level that the UK's chief scientific advisor said would be a good outcome for Britain. Almost 3.7 million people here in the UK have now tested positive. Fed Chair Jerome Powell is expected to maintain the central bank's aggressive support of the U.S. economy. That's despite having seen what he called a light at the end of the tunnel from the coronavirus pandemic. Fed policymakers are all but certain to hold interest rates near zero when they wrap up their 2-day meeting. That's later today. And former President Donald Trump looks to be headed for acquittal in his second impeachment trial. Republican Senator Rand Paul tried to declare the proceedings unconstitutional and was blocked by a 55 to 45 vote. It probably serves as a rough proxy for the eventual verdict and is well short of the 2/3 majority needed to convict. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the skyward march in GameStop continues to accelerate. Its stock nearly doubled during exchange hours and then rallied another 40% in after-hours trading. Now, the battle has turned into one of Reddit day traders versus hedge fund heavyweights. Joining us now to discuss is Bloomberg's Danny Berger. Danny, this is an incredible story on a number of levels. First of all, how much of a headache is this causing hedge funds?
Yeah, I think it's really interesting how, as you say, this battle between hedge funds and Reddit day traders is emerging. And yes, it is causing a really big headache for these hedge fund managers, specifically Melvin Capital. It's an easy one to see where the pain is because a lot of these Reddit message forums cite them specifically saying, hey, they've doubled down on their GameStop bet. They also got a fresh cash injection from Ken Griffin and Steve Cohen's hedge funds. And so they're kind of saying this is us going against the establishment more or less. So what we've seen is the GameStop shares have surged. They're up more than 70% already pre-market today. And we've seen other hedge fund favorites to short have also moved higher as well. Some in Europe too. Evotech, for example, on the bottom there. That's one of the biggest short positions that Melvin Capital has in Europe. So short positions, the most popular shorts over the past 2 days, have rallied 15%. And because it's getting more expensive now for those people to short them, because of the collateral they'll have to post with the higher prices for these hedge funds, we've also seen hedge fund longs start to suffer. The idea being that perhaps they're taking profit on some of their long positions to fund the absolute wildness that's going on with the stocks that they're short.
I mean, just to put into context, right, the value of GameStop now exceeds 55 members of the S&P 500, including Under Armour. It's pretty out there. What are these traders doing on Reddit? Is it actually legal, Danny?
It is a complete gray area, and there's a lot of debate about this right now. Could it be a pump and dump sort of thing that the SEC pursues? Well, looking just on case studies, some of the metrics they say, okay, here are the tests we use to say if this is pump and dump. One of them, for example, is there an intent to create artificial prices through supply and demand dynamics that aren't legitimate? Well, who's to say what's legitimate supply and demand? No one here is pretending that GameStop has more fundamental value than it actually does. They're just enjoying buying it. They're being very transparent on what they're doing. So there's no sense of core fraud here. Still, the SEC could look at this and say there's some sort of market manipulation going on here. And you have to remember that a lot of these hedge fund managers who currently are against these Reddit traders in terms of positionings are ones like Steve Cohen, who has a very rich history with dealing with the SEC. So you'd have to imagine that they're hearing from a lot of people. Michael Burry of a well-known hedge fund renown as well, tweeting saying that the SEC needs to look at it. There should be legal and regulatory repercussions. This is unnatural, insane, and dangerous. He has since deleted this tweet, but it's notable because I should say Michael Burry also was pro GameStop long back in 2019. So the SEC surely is hearing from a lot of prominent people who are concerned about what's going on.
Danny, thank you so much. We'll have plenty more, of course, on GameStop throughout the day and I'm sure the week. Now, coming up, the World Economic Forum is looking a little different this year. Yes, the week's Davos agenda sees world leaders meet virtually, and Bloomberg brings you a piece of the action. Don't miss today's exclusive interviews with the Dutch Central Bank Governor, Klaas Knot. That's coming up shortly. And then later on in the day, we also speak with the EU's digital and antitrust chief, Margrethe Vestager. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. And now let's get to an exclusive conversation from the Davos agenda, this year's online gathering of the World Economic Forum. Now, is Europe's economy starting to follow the familiar pattern of lagging the rest of the world when recovering from a crisis? Well, that was the upshot of the International Monetary Fund's forecast yesterday. They did downgrade the European growth outlook for 2021, underscoring a generally poor performance compared with China and the US. Well, joining us now is Klaas Knot. He's the governor of the Dutch Central Bank. Governor Knot, thank you so much for joining us. I know 2020 was quite a year for central banks and, frankly, the world because of the health crisis. Governor, when you look into 2021, so, you know, there's this delicate thing called inflation, whether we're going to see it or not. But what kind of impact do you think euro strength could have on inflation, and how can the central bank counter that if needed?
Well, I mean, obviously the euro has strengthened a little bit over the last few weeks and months, and that is something that, of course, we monitor very, very carefully. It's one of the factors, not the exclusive factor, but one of the factors that we take into account when arriving at our assessment of where inflation is going to go. And if the factor became too dominant in terms of threatening to derail our inflation objective, then of course we would have the tools available to counter that.
Can you, Governor, give me an idea of exactly how markets should look at these ECB financial condition index? What should it be telling us?
Well, in the December meeting, we made the rotation away from a purely quantity-based approach toward asset purchases, toward a more mixed approach. I would say that we have now with both quantities, but also prices in the sense of yields and financing conditions play an important role. And of course, that all starts with the realization that in the euro area, interest rates are lower than any other place in the world. If you look at short rates, 50 basis points lower than in the US, UK, Japan. If you look at the 10-year average rate, it's like more than 100 basis points lower than in the US, which implies that also the term premium is 50 basis points more compressed. And the term premium is, of course, the objective of our asset purchases. So that was the starting point against which we decided that preserving these very favorable financing conditions would probably be the best contributions we could make toward meeting our inflation objective. Now, financing conditions are broader than just bond yields and interest rates. Obviously, credit conditions in the euro area also play a very important role. 85% of all financial intermediation in the euro area is bank intermediation. So the credit channel is also of huge importance. And we have many interest rates, we have many risk premia in the euro area, many different yield curves. That's why we always say it's a holistic concept. It's not just one single indicator. But of course, that concept, financing conditions, is going to move over time. And then we have to come to an assessment, and one of my colleagues likened this to bad cholesterol versus good cholesterol. We have to come to an assessment whether the reason for financing conditions to move is actually benign or not. If it is due to a resumption of market stressed conditions, like we've seen in March last year, then clearly we want to counter that development. If it is due to improved growth prospects, better inflation expectation, then of course we need to have a discussion in the Council to what extent we want to push back against these developments. There could be a legitimate reason still to push back, because that would allow us to provide additional monetary accommodation at a time in which inflation has not yet converged toward our objective.
That's pretty clear. Governor, can I just go back to euro appreciation and the fact that you said that you would have the tools to do something about it? What would be your preferred tool?
Well, also that would, of course, have to be a holistic assessment of all the tools that we have available in our toolbox. But the DFR would be one tool. I always quip that we've explored the effective lower bound, but we haven't found it yet. So there is still room to cut rates. But of course, that would also have to be seen in conjunction to our overall monetary stance, which is determined by a multiplicity of tools, asset purchases, TLTROs, forward guidance. They all come into play here.
Do you worry that at some point this will actually, you will damage the economy at the margins because of euro strength?
Well, again, if euro strength were to become a problem in terms of derailing our inflation objective, then, of course, it would take more prominence in our discussions. But the fact of the matter is that if you look at trade, the euro area is still an area with a current account surplus, not a deficit. So in that sense, that's a less prominent issue than the impact that an appreciating euro might potentially have on our inflation outlook.
Governor, talk to me about when you actually think that the ECB should at least start thinking about normalizing interest rates. Now, I know everything's to play. We don't exactly know what kind of, further lockdowns we'll see and whether we'll see a double-dip recession. But what's your thinking in terms of timeline on that?
Well, it's clearly too early to talk about an exit of the low-for-long interest rate policy. I mean, my assessment of the economy at this moment is one of cautious optimism. The cautious part predominantly relates to what I think will dominate still the first half of the year, which is the second wave, the renewed intensification of the lockdowns, the possible virus mutations that we're currently concerned about, etc. But then after the summer, I would say there should be room for optimism. Optimism because the vaccines and the rollout of the vaccines should actually provide us with a durable perspective of being able to lift our economies out of these containment restrictions. Again, we've seen in the third quarter of last year that the recovery in that situation can then be very strong. Actually, last year it was even stronger than the most optimistic members of the Governing Council had hoped for. So there is optimism. But then, of course, we will be stuck with the legacy of the corona pandemic, which means that output will be below potential for some time to come. And that will, of course, soften inflationary pressures for a while. And it has to be seen how that will play out before we can start talking about normalizing interest rates.
How much, if you look at lockdowns, how quickly can we be out of lockdowns? I know there's also controversy about European vaccine access, but again, how difficult is it to say, come the summer, we'll be a lot less locked down? And so how difficult is it to actually have a projection on what that means for the European economy?
Well, that's actually very difficult because I think it critically depends on the vaccine rollout. I'm not an epidemiologist, so I can't sort of make any better informed judgments on that than what I read in the papers. I observe that there are some complications in terms of the vaccine rollout. I'm hopeful that when sort of our pressures will mount in society, that there can still be an acceleration, because I do believe that the only durable perspective of coming out of this pandemic does depend on the vaccines. Without the vaccines, we would run the risk of having sort of a stop-go pattern with respect to infections going up and down and lifting restrictions, infections going up again, etc., as we've also seen last year. So everything critically depends on the vaccine rollout. And on that assessment, I think you need other specialists than me in the program.
Governor, we'll also speak to those specialists as well, but you're a specialist, of course, of the crossroads between lockdowns and the economy. The longer the lockdowns, is there a permanent damage to the European economy that could take hold, or does it simply delay the recovery?
Well, that also remains to be seen. I observe with sort of some, how do you say that, some positive feelings that at least the economy seems to adapt. So the economic impact of the second wave of lockdown seems to be less severe than of the first wave. So it shows that our economy has a certain degree of agility. That sort of digitalization, we've all undergone a crash course digitalization in Europe. But that, for instance, entails that the industrial sector is not affected at this moment that much by the second wave. The services sector, of course, is. But the services sector can also recover quite quickly. It's not a very capital-intense sector. So there will be some scaring. The wave of bankruptcies that we haven't seen yet, the NPLs that will probably go up. I'm optimistic about the state of the banking sector. I don't think that the risk of financial amplification at this moment is really a pressing risk, but it is also something that we need to monitor. There will be some scaring, but I'm hopeful that will not be too big a problem going forward, and that at some point we can reach full capacity again and draw the people into the labor market again that have lost their jobs or that are about to lose their jobs in the coronavirus.
Governor, given what you've just laid out, why do the markets actually see a little chance of a rate cut?
Well, the markets, of course, look at the inflation outlook, and markets know that we have an objective of below but close to 2%. And there are very few market participants that actually predict us meeting that target in, let's say, the next 2 years or so, which I think is the horizon that most market participants focus on, which is not necessarily the medium term that we focus on. I want to insist on that point. But since inflation in most projections still does not reach our objective, obviously markets are not focused on any rate hikes because they understand our forward guidance in that sense, which is also clear about the fact that there will not be rate hikes until we have sustainable convergence toward our inflation objective, which is not necessarily the
Governor,
medium
very
term
quickly,
that
because
we
we're running out of time. Do you worry about bubbles in financial markets?
Yes, I do. I do worry about the side effects of monetary policy, but as long as we're in a crisis, there's clearly little trade-off to be made. We always have to assess proportionality of our interventions, and once we move out of the emergency, the proportionality assessment will become a different assessment than what it was in the emergency, and then the side effects, including the financial bubbles, will clearly have to be taken into account.
Governor, thank you so much for your time today. We really appreciate it. Note there, the Dutch Central Bank Governor. Now, coming up a little bit later, we also speak to many more chief executives and central bankers from the Davos agenda. We speak to the Airbus chief executive, Guillaume Faury. A lot of questions, of course, about travel and flying. This is Bloomberg.
you have natural froth in the system. And there's only so much you can do about it. Now, that causes all sorts of bubbles. Asset bubbles come and go, and there's lots of conversation about things like Bitcoin and SPACs and GameStop and other companies and what's happening. Those are asset bubbles, like the crisis of 2000. And those, they can end badly, but they don't affect the actual economy. They don't affect the actual banking system and the stability and the security that we're talking about here.
Well, that was Mary Erdoes from JP Morgan speaking at the virtual World Economic Forum on a very interesting panel that I did also with Jess of Barclays. We spoke about strengthening the financial system and some of the bubbles out there. Coming up, after the current crisis, can the world make progress on green growth, on equality and diversity? We'll discuss how to build back better with Vivian Hunt. That's coming up next. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Pfizer will be able to deliver vaccine doses to the U.S. faster than expected. Another 200 million by the end of May. That is well ahead of an earlier deadline of June. It's down to a change in the vaccine's label that allows healthcare providers to extract an additional dose from each vial. Now, the European Central Bank is studying if differences in policy with the Federal Reserve are boosting the euro. Bloomberg sources tell us policymakers are worried euro strength is depressing inflation already below zero. It could force the central bank to provide more stimulus. And former President Donald Trump looks to be headed for acquittal in the second impeachment trial. Republican Senator Rand Paul tried to declare the proceedings unconstitutional and was blocked by a 55 to 45 vote. It probably serves as a rough proxy for the eventual verdict and is well short of the two-thirds majority needed to convict. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, can the world make progress on green growth and equality and on diversity? These are some of the key questions under discussion at the virtual World Economic Forum this week. In short, after the current crisis, can we return stronger and better than before? Well, with us now is Vivian Hunt, managing partner in the UK and Ireland at McKinsey. And Vivian, I know you've done through many years a lot of work in trying to spearhead some of the changes at a lot of the companies. So thank you so much for joining us. The concern, Vivian, is that we keep on saying we're building better, we're building greener, more equal. But actually, the legacy of the pandemic is also fewer women have gone back to work. Homeschooling means that a lot of the burden is on females. So how much inequality is a pandemic going to create in the first place?
Well, good morning, Francine, and thank you very much for having me on. I will not make any apologies or dilution for the fact that the combined effect of the health pandemic, the economic crisis, and the disproportionate impact on some vulnerable populations. You mentioned the impact of women in work and with higher numbers of their jobs being affected, as well as choosing to either press pause or leave the workforce because of domestic and other care responsibilities, or just the stress and pressure of managing so many different things. I think men have felt that just as much. And when you look at the Edelman survey, published just before Davos, that illustrates how business leaders are now amongst the most trusted people for colleagues and employees. Your manager and your company are often more trusted than journalists and politicians. It reminds us that we not only have committed to, but also need to keep those commitments to have a more inclusive recovery from this crisis, a more green and sustainable recovery, and frankly, one more that pays attention to the needs of the people who are living and working in the economy. And your example of the impact on women or communities of color could be two examples, but it also could be about reskilling and the impact of technology. So we need businesses not just to make the commitments to stakeholder capitalism that Davos and so many others in business are espousing. We actually need concrete progress.
How do you measure that progress, Vivian? And again, what you know, we worry about, what I'm sure you worry about, a lot of Davos participants, is that this is all happy talk. It's pledges, but then if you can't measure it, we could turn around in 2 years and realize that instead of going forwards, we've even gone backwards.
Well, I'm very encouraged that the clients and organizations that we are talking to are all looking for ways to go from talk to action. In some ways, the Business Roundtable or the CBI or the CIBC's commitments, they've been out for some time, and indeed, a good number of companies, well over a third, have already included purpose-led statements or some type of ESG outcomes in their company goals prior to 2020. So the seeds of this revolution were already there, but it gained real pace and economic force and momentum last year. How do you make it concrete? We are very sure that efforts like the WEF's initiative to develop metrics and accountability tools to measure SDGs, to measure ESG, and to sign up for a simple body of metrics. I think there are 21 or so metrics, so a reasonable number to help serve as leading indicators on environment, social impact, and governance. I believe Klaus announced that over 60 companies had signed up to that even as we speak during Davos. And I think it's those kind of concrete actions that will make the difference. First is committing to it within your strategy and making it concrete. Secondly is measuring it so that you know how and where you're making progress on E, S, and G. And third is communicating in a transparent way. None of us are going to make progress on everything at one time, but if we don't have the initiatives and we don't have the metrics, we definitely won't make progress.
Vivian, do you think that companies really go out and seek systemic inequality within their organization to try and make it better?
Well, none of us are seeking an unequal outcome. I think as people as well as leaders, we've seen that there are inequalities structurally in the system. And when you look at historically underrepresented groups, uneven access to education, uneven skill development, uneven care responsibilities in the home, uneven access to capital, those are all elements that contribute to a different starting point. And so I think what companies are realizing is that equity of outcomes is what we're solving for. Equity of contributions back, for example, to climate change or to historically underrepresented groups, and that businesses have to do more to take active steps to ensure that they've got a truly level playing field. And that came home so clearly during the simultaneous crises of 2020, and frankly, that's continuing through 2021.
Vivian, thanks so much for joining us. Vivian Hunt there, senior partner at McKinsey, joining us today to talk about some of the efforts and what companies can also do more. Thank you. Now, COP26 President Alok Sharma says the UK government is committed to pushing its green agenda to combat climate change, adding that he is pleased that the US has rejoined the fight. Well, Sharma spoke in an exclusive interview with Bloomberg's Alex Steele and Guy Johnson from London.
Administration in the US, which is back in the global fight against climate change. That's very good news. It's great news that on the first day in office, the president signed an executive order to rejoin the Paris Agreement. I think that sent absolutely the right signal to the world. And of course, the commitment to net zero by 2050. We are going to work closely with the US. And indeed, if you look at our approach to climate, it is now very much aligned as well. Of course, the world will also look to see what the US itself does in terms of its emission targets and also in terms of finance, which is a big issue, particularly for vulnerable countries, in terms of getting finance, public finance, but also private finance flowing to supporting climate action in vulnerable countries. You know, there is a figure of $100 billion a year. There was a commitment made by developed countries to support climate action in developing countries, and it's a totemic issue, and it is a matter of trust. And one of the things that I have been saying, and I will continue to say, is that this is something that we have to deliver on collectively.
Well, I'm glad you brought up the financing, because that's where the pandemic in some ways made this conversation a lot harder. I mean, here in the U.S., the energy is going to be spent on a relief bill, and it's a lot of question marks as to how much President Biden's going to be able to get for any kind of climate plan. Forget emerging markets that are just trying to deal with the virus itself. How do we manage this?
Well, Alex, I think there are two issues about this. One, of course, is, you know, if you look at the UK, you talked about Prime Minister Johnson, about the green industrial revolution that he's set on course. And this is about putting public money, but then also leveraging in many multiples in terms of private funding to get our economies going. And it is about jobs. And you know, we've shown in the UK that green growth is possible. Over the last 30 years, we've managed to grow our economy by 75% and cut emissions by 43%. But going back to the issue of climate finance and supporting developing countries, that is absolutely vitally important. And one of the messages that I get when I talk to countries which are vulnerable, countries which are at the front line of climate change, but aren't actually responsible for the position that we're in right now. What they say to me is that, of course, they completely understand that developing countries have managed to raise significant funds to support their own economies, but they then contrast that with the fact that we haven't yet got to the $100 billion. And that is why we need to make sure that at the same time that we're supporting our economies, we're supporting jobs and livelihoods in our country, we must also support vulnerable countries as well.
Well, that was COP26 President Alok Sharma. Now, we're just getting some images, I believe, from Belgium about the Pfizer vaccine. This is, of course, on the back of a huge controversy that has also engulfed AstraZeneca, or mostly engulfed AstraZeneca, in terms of how many doses of the vaccine have been delivered to Europe. So I think this is one of the centers in Belgium taking stock. You can see it's called Frigo Trans. Remember, one of the big concerns about this vaccination rollout is the cold chain. AstraZeneca, in an interview yesterday, this is actually another, I think it's a Pfizer vaccine being delivered, but the drug maker AstraZeneca clearly pushed back yesterday against the European Union on these vaccinations, reacting to threats to its business and saying actually that bloc must also take responsibility for the delays to the rollout of the shot. We'll have plenty more on AstraZeneca and vaccinations. This is Bloomberg.
out for the companies. I think that's what we're seeing at the minute.
Okay, how will this get resolved, Sam? So first of all, how many more shots can they get to the right people? And, you know, it's true that AstraZeneca is not making any money out of these vaccines, right?
Correct. That is what they have committed to do. In fact, you look at the price that the European Union has got, and perhaps you do wonder sometimes whether the reason is working hard on the price or whatever it is that they're doing, I don't know. But across the board, the only contract they ever signed faster than other countries, at least the UK, was the one with Moderna. Otherwise, there's a 2 to 3 month delta between them. So it's probably, a lot of it's probably to do with the complexity of getting the supply chain in place to get these doses up, and maybe some units in some different countries have a tougher time of doing that.
Sam, you also have a great model, which I was very taken by, because you basically, you know, through your research, look at every country, the amount of vaccination doses that they've done last 7 days, and how much or how long it'll take for them to reach herd immunity. How quickly can these numbers change because we're going to get new vaccines, because we're going to get new doses being delivered?
Yeah, obviously, it all depends on how quickly the countries start vaccinating. So the analysis that you're referring to, Francine, leverages the amazing data that Bloomberg colleagues have been putting on the terminal, which is the number of vaccinations on a daily. I mean, some countries only updated every other day or every 2 or 3 days. So we used that data and looked at how fast they're vaccinating their population, and used the same change of rate of change and applied forward. And you see that the European Union is supremely behind, certainly Israel, but also the US and the UK. So what they need to do is to ramp up that the number of vaccinations, and I'm convinced they'll do it. But the data hopefully will update it as soon as we see any changes in that rate. And you'll probably start seeing some differences in different countries across the EU 27. That's going to be interesting to see.
Sam, thanks so much. Sam Fazeli there from, of course, our Bloomberg Intelligence Pharmaceuticals team. Now, coming up, we continue the conversation about vaccine supply. We hear from the chief executive of Pfizer next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. GameStop rally accelerated yesterday, nearly doubling during trading hours and surging even more after a tweet from Elon Musk. The firm is now worth over $10 billion, up about 700% year to date. It's been driven by Reddit's Wall Street Bets forum, fighting back against investors betting the stock will drop. Michael Burry of The Big Short fame says the rally is unnatural, insane, and should have legal repercussions. Walgreens has named Starbucks executive Roz Brewer as its new CEO. She'll currently be the only black woman leading an S&P 500 company. After bolstering Starbucks sales, Brewer will be charged with turning around the sprawling pharmacy empire. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Pfizer says vaccine nationalism is a lose-lose game. Its chief executive, Albert Bourla, has told Bloomberg it's too soon to suggest that Europe is behind in distributions of the vaccines. He spoke to our editor-in-chief, John Micklethwait.
Political leadership is afraid. They try to do the best for their citizens. And it's a very difficult situation. So that creates a lot of tension. The voices are getting louder, and sometimes suggestions that are not prudent are on the table. I don't think it's a good idea even to insinuate in a global supply type of network that exists right now that someone can ban the exports of a vaccine like that. Let's keep in mind that a lot of the raw materials that are needed to produce this vaccine are coming from other countries. So if one starts bans, then what will be the response of the other? And then that will be a lose-lose situation rather than a situation that will help Europe win. What we are doing, and we are doing very collaboratively, both with the European Commission, that we have excellent relations, and also with the state members, it is to try to increase dramatically our manufacturing capacity. And right now we have announced that from 1.3 billion doses, we will be able to, that we were projecting to produce last year. We announced 2 weeks ago that right now we have a very solid plan that we will produce more than 2 billion doses this year. As a result, we have made initial agreements with the European Commission that we will provide them 200 million additional doses to Europe, starting 75 million of them, of these 200, will be already in the second quarter. That's a promise that we gave them, and I believe that we are well on line to achieve it. So I understand the concerns. I understand that everybody wants something that can potentially open the economy, save lives. And I recommend a little bit of patience so that we will be able to do our job and provide as much product available for everyone.
This issue about fears of taking the vaccine, what are you doing to combat those? Or do you think that's a job for government?
No, I think it's a job for everyone. It's a job for you as journalists. It's a job for the government. It's a job of every scientist that can speak out, and it is a job of us. What I would say is that those that they have fears, okay, I understand them, but they need to think that when it comes to vaccines, the decision to take it or not will not affect only their own lives. They will affect the lives of others, and likely, or most likely, it will affect the lives of people that they love the most, which are the people that they socialize the most. If you don't take the vaccine, you're becoming the weakling that allows this virus to replicate. So please think it twice before you make such a decision, and don't let fear get in the way.
Well, that was the Pfizer chief executive speaking to Arjan Mikothwaite. Bloomberg Surveillance continues in the next hour. We look at markets, we look at vaccines, we look at treasuries ahead of the Fed. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. The UK becomes the first nation in Europe with 100,000 deaths from the coronavirus. Global cases pass 100 million. AstraZeneca pushes back against the EU. The drug maker says the union must take responsibility for delays to the rollout of the vaccine. And GameStop won't stop. A Reddit revolution leaves the hedge fund pros crushed in its wake. Good morning, everyone. Happy Wednesday. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, we have a number of stories. I know we started off with, of course, the number of deaths here in the UK, but the focus is also really on the Fed, and that could move some of the treasuries. I know you're focused, as I am, on GameStop, what this means for hedge funds. Our most read story actually on the Bloomberg terminal today, and we'll look forward to the next couple of days on that.
This is history in the making. It has gone from a, interesting story and a lot of things. John Author's article for Bloomberg Opinion is absolutely brilliant. And in the last 20 minutes, Francine, this has truly become history making. It's about derivatives. I'm thrilled Gene Frieda's with us. He's not a GameStop expert, but he certainly has the knowledge to explain some of these dynamics that are going on.
Yeah.
What's happened to GameStop, Francine, in the last 20 minutes is historic.
It is historic, and actually, one of the main questions is what the regulators will do about it. So I know you're looking at the hedge fund angle, but we're also trying to get a hold of the regulator to see what they can do if what's happening is actually legal. Now let's get straight to the Bloomberg. First word news, here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. Former President Trump appears headed for acquittal
in his second impeachment trial. Only 5 Senate Republicans voted with the Democrats to block a move to declare the trial unconstitutional. The 55-45 vote probably serves as a rough proxy. It's well short of the 2/3 majority that would be needed for conviction. Senate Majority Leader Chuck Schumer says he's ready to move on a Democrat-only coronavirus stimulus plan next week. That's if Republicans continue to reject President Biden's $1.9 trillion proposal. A bipartisan group of senators made it clear an alternative backed by both parties isn't dead yet, though. The lawmakers agreed there's a need for targeted relief package. Fed Chair Jerome Powell is expected to maintain the central bank's aggressive support of the U.S. economy. That's despite having seen what he called light at the end of the tunnel from the coronavirus pandemic. Fed policymakers are all but certain to hold interest rates near zero when they wrap up their 2-day meeting today. And the UK is facing up to painful lessons after 100,000 deaths from the coronavirus. Last night at a press conference, Prime Minister Boris Johnson said he was deeply sorry for every life that has been lost. But Johnson offered few answers to the questions of what went so wrong over the past year. The UK now has the world's 5th highest death toll from the virus. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Greatly appreciate it. Equities, bonds, currencies, commodities on this Fed day. A real stasis to the market. Red and green on the screen. Microsoft leading NASDAQ 100 higher. We've got green there, a nice 0.5%, maybe a 0.4% move. A little bit of red the other way. I don't get much in the yield space this morning. A little bit of curve steepening. I guess I'd make note of that. Oil not telling much. Dennis Gartman on gold. I believe we do that in the next hour. And dollar, not much. Francine, sterling has my attention. Maybe the Bank of England's got shares in GameStop.
Maybe. Actually, what I'm most focused on, Tom, is what Klaas Noort, the European Central Bank official, told me, saying that the ECB has the necessary tools to avoid any further strengthening of the currency, and actually the euro fell on the back of that interview. So that certainly has my attention. Treasury yields holding steady. Of course, we find out more about the Fed today after its first meeting of 2021. Dollar edging up. Bitcoin, Tom, dipping below the 32,000 level. What's important about Bitcoin, or at least there was a headline that grabbed my attention. I'm not sure what to make of it, but Anthony Scaramucci was also making a link between GameStop and Bitcoin. I would suggest the world's gone mad at the margins, and we need to spend a bit of time talking about that.
Go back to that board, please, if you would, Matt, the one with GameStop on it. This is the close on GameStop yesterday at 147. Gene Frieda wired up with this, Francine, and we have now broken out to a 312. Thank you for that screen, Tanya. That really helps. I really want to, folks, we're losing perspective on this. I'm not going to go into the gamma derivatives right now, but just simply say we've gone from 147 to 312 and moving higher. Francine?
Yeah, Tom, you know, there's a full-blown retail rate really targeting some of their short books. Many of the stocks that hedge funds are bullish on suddenly in trouble as well. This is behind everything that we're seeing, so we need to spend a bit more time on GameStop. Joining us now to talk about something else, but maybe there is a link, Gene Frieda, PIMCO Global Strategist. Gene, I don't know whether, I mean, I know you can't talk about GameStop, but does that translate into how you see some of the asset classes in general?
Yeah, I mean, I think the analog is really around how stimulus money, how loose, you know, fiscal and monetary policy are kind of percolating through the markets, you know, and you can see a very clear spillover into certain corners of the market. Anything that's focused on retail day trading, obviously, is, you know, part and parcel of that. So from that perspective, I think the question that inevitably comes up is, you know, how does the Fed think about that, and how do they adjust their strategy? Does it require a strategy adjustment to deal with problems like this?
Is this, you know, from the Fed? Is it regulation, Gene? How does this actually play out?
Yeah, I mean, I think that you know, this Fed, you will probably see under a Democratic administration. I think you're probably going to see a much greater willingness to give the Fed more macroprudential powers. And you'll probably also see a greater willingness of securities regulators to use some of these powers a little bit more, you know, more often than has been the case in recent years. And I think this may be part and parcel of how you actually fill the cracks to avoid extreme spillovers of monetary policy, to parts of the economy where it becomes dangerous or worse.
Gene Frieda with us at PIMCO. We're going to take advantage here of his immense knowledge of the linkage of fundamental markets into the options market. Right now joining us, we're thrilled to bring you Tracy Alloway, who with Joe Weisenthal has really looked at some of these derivative excesses. Tracy, I want to go back to what you and I observed a decade ago, which was the distortions of CDO squareds, where conservative institutions, I want to make this clear, folks, not PIMCO, but where conservative institutions had to affect covers of derivative trades as things moved. As Gene Frieda just said, are we in an equivalent analog this morning?
Well, a lot of people are likening what we're seeing with Wall Street Bets and GameStop to the tech bubble, which I think is fundamentally wrong, because what's different this time around is that people on social media forums are doing something very strategic, and they're being very targeted in what exactly they're buying. It's not just about buying GameStop stock. It's about buying particular options on the stock, which then lead to something called a gamma squeeze for the major dealers. So if you have a bunch of small retail traders who are all buying these small call options, the end impact is actually much, much bigger than their actual spend. If you spend $350 on a GameStop call option, the dealers end up buying the underlying stock by a multiple of that, especially if the stock keeps rising. So these small retail flows end up having a really big impact.
One of the charms, and I'm going to ask you a question Gene Frieda can answer because his general counsel will throw him in the Pacific Ocean. Tracy, I'll be rude and ask you. You beautifully explained, folks, if you take a little bit of money and throw it into a call option, that desk has to hedge that. They have to protect themselves from that with a market purchase. Tracy, within all of your study with Joe Weisenthal, is there a belief conservative institutions could be dragged down by GameStop excess?
I think there's an open question about how market makers are going to respond to this exactly, and I'm talking about the dealer banks here. Clearly, if they have to keep buying the underlying stock over and over and over because the gamma is so high and the market's moving so quickly because of this massive squeeze, they might start pricing those options differently. They might even rethink the way that they're hedging. Now, for other institutional investors, think the hedge funds like Melvin Capital, you would not want to be on the other side of this. And I'm looking at the prices for some of the weekly call options. Those have gone from like $2 to almost $70 in the space of 3 days. That is going to be painful for anyone who was short.
Yeah, Francine's kids are doing this on the couch at home. They've gone from 2 to 38, which is pretty good as well. Tracy, one final question, if we could. You mentioned Melvin Capital, and folks, for all of Bloomberg, we're going to be very careful about the speculation of who's involved in this. Are there other Melvin Capitals out there, and are there other major banks involved in these desk transactions?
So I'm not exactly sure who else has shorts out, but I'm going to flip this question slightly. The institutional participation here is interesting, and what you might start to see is anyone who actually has a long position in GameStop maybe start to take profits at this moment in time and take some money off the table. So, for instance, Michael Burry of pre-2007 CDO fame, to get back to your earlier point, is out there saying that he thinks what's going on in GameStop is just crazy and probably illegal. He has a long position in GameStop. In fact, you could argue that he kind of started this whole cycle by getting people excited about the stock. It sounds like he might be at a place where he starts taking money off the table, and maybe that's the thing that kind of knocks this entire feedback loop off balance, and maybe that's what ends the gamma squeeze finally. But again, looking at GameStop stock pre-market, I think it's up over 100% at this point.
330, Tracy.
Yeah, exactly.
Tracy, I was going to ask you about the legality. So, is all of this legal, and could it be soon illegal? Like, who's looking at this?
So I can guarantee you there are people at the U.S. securities regulator who are probably watching this with great interest. The problem is whenever you have something new like this happen in the market, it takes them quite a bit of time to digest what's happening and to compare it back to previous case law. It's not exactly a pump and dump. You know, no one's going, let's buy GameStop stock and then get out before everyone else well, a few people might be doing that. But the actual argument on Wall Street Bets is that this is an undervalued company, let's push the stock higher, and everything will be great and fun. It's a new thing. I think it's going to take time to see what the lawyers come up with here.
Tracy Alloway on short notice. Thank you so much. As we see GameStop move here nicely up at a 330 level. Gene Frieda of PIMCO is with us. Gene, we had Tracy come on to answer many questions I know you don't want to answer, but I've got to ask you, Gene, you and I have studied the derivative space. We understand the theory behind this, delta hedging, being short gamma. You and I can draw the lines and connect the dots. It took Francine's good question. Is this now at a point with modern trading and with social media and messaging that the regulators have to help the markets redraw the dots and the lines?
All I can say, Tom, is I'm glad I do currencies and bonds. I mean, this is this is really outside of my sphere.
Well, we'll continue. Gene Frieda with us this morning. I just think so much going on here. We're going to stay on this GameStop story for anybody in global Wall Street, and I mean including the major banks. This has gone from an interesting study to a must understand what's going on with GME. There is a Fed decision today. Jerome Powell will speak. Michael McKee scheduled to ask difficult questions. He does that. He goes, I have a follow-on question. 2 p.m. today, Caroline Hyde leading our coverage. Stay with us. Futures -9. GameStop buttressed up just moments ago a high. Wow, 338 on GameStop. Good morning. This is Bloomberg.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. I'm losing my voice, Tom, because we're spending so much time looking at GameStop. I'm reading Reddit. It's actually
your kids are killing it. Your kids are just killing it.
Yeah, I mean, ultimate insult, Boomer, if you don't understand exactly what's going on with GameStop. But let's go back to the markets. I'm speaking about myself. Let's go back to Treasuries, to something that's more of a wheelhouse for Gene Fried of PIMCO, who's been very, very patient with us this morning. Gene, when you look at what we hear from the Fed, so of course a lot of the focus will be on bond buying in the future, but how do they navigate this kind of, lockdown world economy and what they can do without, spurring more inequality?
Yeah, I think it's a tricky balancing act. I mean, I feel right now that markets are kind of treading this very fine path between stimulus optimism and virus pessimism, and the Fed is very skewed in one direction. It's all about ensuring that the economy is backstopped, financial conditions are backstopped, and so from that perspective, I think these kind of isolated pockets of excess are going to be a feature for at least the next 6 to 9 months, unless we kind of fall off the path to the left side and become much more pessimistic about what vaccination actually delivers us. And I think that has to be at least a realistic possibility. The market is very, has really kind of looked through all of the downside risks.
Where do you see, Gene, Treasuries at the end of the year?
I mean, I think, this is a horribly boring answer, but I think, my baseline would be somewhere around 1.5% on the idea that, we are going to get a lot of stimulus, and that's kind of well understood in the market. That was the theme that the market ran with for the first couple of weeks of the year. But it's going to be a very choppy, path back to normality. The vaccination is not a panacea. It's really about some combination of virus containment and vaccination. And I think there's probably some room for disappointment there, and also probably some room for disappointment around the speed with which consumers kind of come out of their shells and start, going on with normal life. And so I think that really kind of contains the upside in Treasury yields.
Gene, how does PIMCO perceive the foreign exchange market? Is it disassociated and delinked of all that's going on, or do you get information from dollar dynamics?
I think you do. I mean, increasingly, I think you may need to kind of distinguish between dollar dynamics and cyclical dynamics. But I think, the way that I see currency markets right now, I think in developed markets, we're trading vaccination success. You can see it with sterling. And in emerging markets, we're trading infection rates. And they're very distinct. If emerging markets do well this year, it will really be as a leverage play on the successes of developed markets. But right now, you can really start to see differentiation emerging depending on how bad the infection rates are. In DMs, in developed markets, it's really about speed of vaccination. Even that's probably too simplistic over the course of the year. But I think it's, it's nice to actually see some differentiation starting to happen relative to the fourth quarter when it was all about selling the dollar.
Is there an urgent need to hedge equity belief out 1 year, 3 years, 5 years against foreign exchange?
Equities, you said, to hedge equities?
If you have a stock portfolio or frankly a bond portfolio, is there going to be enough currency dynamics where I need to hedge and there's an efficacy to hedging?
I think it really depends on the market. My sense is that there will be a need to hedge. I mean, typically what happens when you have a big move in the dollar, as we've seen over the last 6 months, you kind of stall out after 6 months, you consolidate, and then the trend continues. And I think, coming into this year, people sort of thought immediate continuation, which, after a multi-standard deviation is just not the norm. It's never been the norm. But, if you look over a 1.5 to 2.5 year horizon, I think you are going to have to hedge some of your currency risk. And the dollar still has a significant leg down unless we have completely misunderstood Fed average inflation targeting.
Gene, we had a conversation with Klaas Noot, who basically said the ECB still has the tools to deal with a strengthening euro. How problematic is euro strength for euro? Does it actually spur inflation?
Does it spur disinflation in the Eurozone? I think, it amazes me in a way the ECB's, focus on the exchange rate, given that the dollar is depreciated against everything, number one. And number two, the fact that, if the exchange rate's not going up, it's probably going to be a function of relative Eurozone weakness. And I think that's what we're starting to see emerge right now in the Eurozone. Basically, the fact that they're not handling the virus as well, they're slow off the mark on vaccinations, the stimulus isn't of the same magnitude as in the U.S. So, yes, I think the ECB has the tools. I think it has to be a little bit careful what it threatens. It's not obvious to me that there's a great willingness to cut deposit rates further. And so if you make the threat, you better be ready to carry it out. Personally, I don't think they will have to make good on that threat because of suboptimal economic outcomes in the Eurozone.
Jean, thank you so much. Jean Frieda there with some of the things that we need to watch out for and some of, I guess, the fault lines. Jean, if you look at, some of the things in the emerging markets, I don't know if we have time for one more question with Jean Frieda, but Jean, since I have you, what does this all mean for emerging markets?
I think the emerging markets are a leverage play on developed market growth, with one caveat. Emerging markets are going to be stuck with this to a much greater degree, partly because of lack of vaccine availability and partly because of health systems that aren't as advanced. But emerging market can still do very well as a function of capital inflows because of good outcomes in the developed markets. The risk is that some emerging markets will be unsettled politically, and the politics translates directly into the fiscal. And so it's really kind of drawing a line under, how far down the credit spectrum you want to go in being exposed to emerging markets. But I think generally EM should do okay.
Jean Frieda, thank you so much. Greatly appreciate it with PIMCO. Right now, let me do a data check here. In the markets, I guess it's a churn is how I'm going to put it. You got some tech lift with Microsoft. We'll get to Eileen Burbidge there in a moment on that. But I also want to note GameStop up to 330. I'm going to call it 308. All over the media, Francine, it's I'm a boomer on this and clueless. And, I'm learning as I can. But, we're getting there. Let's pull back a little bit.
Yeah, it wasn't directed at us, Tom, but it is like the ultimate put down, boomer.
Yes, Eileen Burbidge is not a boomer. She's with Passion Capital and joins us right now. Eileen, your thoughts on GameStop quickly here? I mean, do we blame it on you?
I don't think you can blame it on me, but you might be able to blame it on even younger people. I think the thing about GameStop for me, and I'm not the I'm not your Wall Street expert. That's not why you have me on, Tom. But you have me on because of sort of tech trends and underlying tech enablement. What's remarkable to me about what's happening with GameStop is two things. One, there's no such thing as proprietary data anymore. And we know that a lot of the hedge funds were relying on data sources that they were gathering themselves, they were paying for, or potentially even accessing from retail sort of platforms such as Robinhood. When that dries up, they've got to go to other sources, and you've got the wisdom of the crowd or what's happening with retail investors coming from different sources, right?
Oh, that's in your wheelhouse, Eileen. I'm going to go to Michael Mabusin and, historic essays 30 years ago, 20 years ago, talking about what your world technology has wrought. From an engineering standpoint, Eileen Burbidge, what I would say is regulation has no understanding of the slew rates involved given liquidity and leverage. Do you have any sense government can get around the slew rates of gamma, delta hedging, or anything else that might be out there in your world?
I mean, I think that the regulators have a lot on their hands right now with respect to technology, right? And it's coming from all different sides. As you're pointing out, this is one area that it's way, way, way behind. And the point that, the fact that retail investors are going to be able to communicate with one another, that they can actually consolidate their buying power in such a way and provide research data points for these larger institutional investors is something I don't think the regulators would have anticipated even 3 years ago, let alone 20 years ago.
How can they get up front of it, Eileen? And good morning.
Hi, good morning. How can the regulators get in front of it? I think it's too late. Yeah. I think they aren't going to be able to. They're going to be catching up. And so there's a lot of discussion now about whether or not the SEC is going to take a look at, whether or not data sharing, data consolidation, data access is actually, fit for purpose. But what's interesting and what you've got these sort of sub-redditors or people that are on Reddit, which is just a social media site. It is just a way for retail investors to communicate with one another, whether, that's acting irresponsibly or needs to fall under some regulation. that population would say, hang on, what we're trying to point out to you is that it's the hedge funds and it's these large institutional investors that have been wielding far too much power, right? So it really depends on what you're looking at. And I think the regulators are going to be really stuck in a frenzy for a long time.
This is wonderful to have Tracy Alloway and then Eileen Burbidge with us as good as we look at GameStop here at the 300-ish level. This is a new world. There's no question about that. Eileen Burbidge will come back on Apple. Coming up, Bridgewater Associates, Robert Prince. Good morning.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
You have natural froth in the system, and there's only so much you can do about it. Now, that causes all sorts of bubbles. Asset bubbles come and go, and there's lots of conversation about things like Bitcoin and SPACs and GameStop and other companies and what's happening. Those are asset bubbles, much like the crisis of 2000. And those, they can end badly, but they don't affect the actual economy. They don't affect the actual banking system and the stability and the security that we're talking about here.
Well, that was Mary Callahan Erdoes, the JP Morgan Asset and Wealth Management Chief Executive, speaking to me yesterday in a World Economic Forum panel, speaking about the financial stability of the banking sector. Now, still with us is Eileen Burbidge, Passion Capital Partner. Eileen, we change our lives because everyone is doing everything on Zoom. The way we work has changed. But how are some of these valuations getting out of hand when it comes to the technology space?
I think out of hand is an interesting way to characterize it, because I'm not sure where the line is. I don't know when we've come into this territory where nobody can really explain what's happening and if it's actually just gotten too far ahead of things. But, I think if, as you pointed out, the pandemic has really changed, how everyone behaves day to day. And if any sector is going to benefit from that, it's going to be the technology sector.
What does that mean, Eileen, for how much we understand, the legacy of what we'll see post-pandemic? How will our lives really change forever? And if they do, if we stay as it is, travel less, speak more by Zoom, speak more, on some of these games and things like that, what are the companies that have a justified valuation?
Yeah, so lots of questions in there, and I don't know that I would be able to say that any of these companies have justifiable valuations. I think that's really, the valuations are all relative, and that's the thing. You have to think about whether or not, these companies and their respective valuations relative to one another make a lot of sense, or relative to the sectors that they're disrupting. Whether or not actually it's going to sort of stay this lofty after the pandemic or not, I really can't predict, and I wouldn't even want to. But what I can say is it's not going to go away. I don't think we're going to revert back to behaviors and habits that were exactly like they were before the pandemic. I don't think they're necessarily going to stay the way they are now, for instance, in this third lockdown in the UK, but we're clearly going to see some sort of hybrid, right? Maybe Tom Keen's going to start using a little bit more paper again, and not just rely on electronics, but there's going to be some sort of hybrid model. There's going to be a little bit of what we've seen in the pandemic that people are just not comfortable with. They're going to continue to use technology in ways that they hadn't anticipated a few years ago. Although those of us in the technology sector would have said, we anticipated this, right. We just didn't think it was going to happen so quickly.
Eileen, is the great surprise after the pandemic that the FANG stocks, the big tech that is winning, really begins to become blue chip psychology, where they deploy capital back to shareholders, where they try to act less is, the Silicon Valley ethos, and much more is a big part of society?
Yeah, I mean, I'd like to see them sort of contributing back to society. That would be a great thing. It would be great to see, Apple do something with its massive cash pile. But, we're in a new world, right? This is a new dawn with respect to what's happening with technology. It's, Tesla's first quarter in the S&P 500. Is the company and is Elon Musk going to start behaving like, the other sort of constituents of the S&P 500? I wouldn't, hold my breath for that. But again, I think what we're going to see is a hybrid. So we're not going to see tech companies behaving like the sort of industry stalwarts, but maybe that's a good thing. And hopefully we kind of take forward the best of both worlds.
But do you see, for example, Amazon at $3,000 a share? Does Jeff Bezos decide to become a Dow component, do a 35-to-1 split, and start acting like the corporate, more conservative societal because they've won the battle?
I don't think Jeff Bezos is ever going to start to rest on his laurels or to sort of decide to declare victory, right? He's got personal interests that go into communications, that go into media. There's a lot that I think he believes his influence and his involvement is going to help affect change for the better. And my suspicion or my guess would be that these companies will continue to think that way, and that where they can actually deploy their resources is probably better than giving it back necessarily. Although they are all, they all have massive philanthropic arms as well, right? Let's not forget that. And they all do really push towards further technology literacy and digital literacy, for instance, in children and for people more generally. But, are they going to behave like the old sort of guard? No, I don't think so.
Eileen, thank you so much. Eileen Burbidge, their Compassion Capital partner, of course, who's getting actually a lot of love also on her staircase. I keep on getting messages on social media saying she has a very Downing Street kind of a staircase. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom. Republican Senator Rand Paul lost a battle, but he may have won the war. Paul's bid to question the constitutionality of former President Trump's impeachment trial lost on a vote of 55 to 45, but the vote serves as a rough proxy for the eventual verdict, and it falls well short of the two-thirds majority needed for a conviction. Federal law enforcement officials are defending the pace of their investigation into the riot at the U.S. Capitol. They say they've charged more than 200 people so far, and more charges are expected. Investigators are offering a reward for whoever is responsible for placing pipe bombs near the Democratic and Republican headquarters in Washington. President Biden will order another 200 million doses of coronavirus vaccines. He would also temporarily speed up shipments for states. The new purchases of Pfizer and Moderna vaccines would increase government orders by about 50% to 600 million shots. Meanwhile, a greater share of the American public wants to get a coronavirus vaccine as soon as possible. That's compared with those surveyed in December. According to the poll by the Kaiser Family Foundation, almost half the adults surveyed were enthusiastic about getting the shots. In December, only 34% were. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thanks so much. Now, coming up, we speak Italy and we speak banks with Davide Serra, Algebris Investments founder and chief executive officer. Who knows, Tom? He'll maybe have a thought or two about GameStop as well. This is Bloomberg.
There's a big difference compared to other search engines. We used money to plant trees all over the world where they are needed most.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we have a number of things to talk about. I know it's valuations in banks. We look at, of course, consolidation in banks. We also look at Italian politics, and we may talk about GameStop. No better person to talk about all of this than Davide Serra, Algebris Chief Executive Officer. Davide, thank you for joining us. If we start with the banks, and we had a number of results resuming dividend payments or paybacks, certainly when it comes to UBS. What are you expecting for the banking sector in 2021?
So, Francine, I think the banking sector has withstand the pandemic shock in an excellent way. Basically, provided an anchor to corporation and real people by basically providing liquidity via the central banks, and in most cases providing moratorium for loans for those activities that had to be shut due to the pandemic. So I think in 2021, there will be an assessment of what's the damage that this has done to the real economy, what's the net losses that it will be on banks' balance sheet vis-a-vis on public balance sheet, And then at that point, I think the central bank will be able to say what's left. And as it happened in the US, or it's happening in Switzerland, then capital returns will be allowed, mainly in the forms of dividends or through consolidation.
We spoke, Davide, to the central bank governor, Klaas Noot, and on the ECB, he says they're watching FX and they could lower rates as part of the tools. What would that do for European banks?
Well, I think the central bank de facto has already started tiering. That means on one side, their monetary policy has a wider implication for monetary transmission. At the same time, they do not want to destabilize the financial system that basically is still based on nominal rates. If eventually the ECB were to keep on bringing nominal rates to more negative, inevitably the banks will have to put this through their customers. So far, they haven't done it yet, but eventually they'll have no choice. And this is why I think the ECB, for the time being, has started tiering. So basically, banks are immune to most of the negative rates environment right now already.
Davide, I just went through a 60-page deck from Citigroup on EU banks. You're truly one of the experts in the world on this matter. What permeates a Citigroup deck is a search for profitability. Is profitability out there for EU banking?
I think it's a very good question. So if you take, for example, a firm like UBS, it's posting a return on equity very similar to Morgan Stanley. So I think actually Morgan Stanley and UBS are among the best results in the world in 2020. Now, that's a very clear business model based on wealth management, on part of corporate investment banking. They're specialized, they have global scale, and they have a brand. So I think in Europe, there are some institutions that do have those characteristics. For example, I can think of a firm that has 65% of its revenue in fee income. That's Banca Intesa, that according to the ECB is one of the strongest balance sheet in Europe, on top of one of the highest quality P&L. So I think it all depends on your business model. In Europe, you have lots of banks still. First of all, too many. Secondly, too many that do bread and butter, like they used to do in the US, regional banks back 10, 15 years ago, and they haven't evolved. So what I think it's needed in Europe is less player, more investment in digital, and a decision of what you want to be as a grown-up by business model. You cannot just be a universal bank and have too many of them with no specialization in today's world.
Davide, you know more than anyone I know in Europe that if you're in a skyscraper of a big bank and you're on the 47th floor, things that go on the 13th floor or the 80th floor really, really matter. The dynamics of GameStop, I guess big banking is removed from that. Are they?
Well, I think right now across the banking system, something has totally changed over the last 10 years. So if you go in any European banks right now, one floor is actually managed by the regulator. So basically what you do have is, 100 to 150 people that are the regulators, and they check every meeting you do. They are basically part of the fabric of the organization. So in a way, the banking industry has become an utility. Now, right now, it's priced as a very risky asset, but in reality, the top 70% of the banking assets, which are in 150 institutions regulated by the ECB, is becoming more and more an utility sector. And that's the reason why I think actually there is more upside that the market is actually pricing.
Davide, just to speak in plain English, when you look at what's happening with GameStop and Reddit and various tweets by Elon Musk and the like, what does that actually mean for the hedge fund business going forward?
Well, for example, within Algebris, the word hedge fund is forbidden because we're an asset manager, we're a global long-only investor. In our view, the idea of having, all this technology stock, long, short in games and not long-term investing, it's something we really do not understand. So we stick to our nitty-gritty, what we've been doing, for the last 15 years in all the category where we do invest. We rank very well on your Bloomberg screen, on long-term, and that's what we do. I think, in particular, in my view, in all the digital world, there is a bit of craziness in valuation. And I think it's probably a trend and a fashion rather than a fundamental, because not every company can be an Apple or a Tesla. And I think now people are, looking for stuff that probably doesn't really exist. And we've already seen it back then in 2000 when I started my career.
Talk to me a little bit about Apollo Global Management. I think you were an investor, Davide, in the past. Given what's happened to Leon Black, who's staying on as chairman, are governance issues resolved or helped, or should they have gone further?
Well, certainly it's not for me to tell, because that is a U.S. firm. It's regulated. They are, historically one of the most successful investors in distress around the world. They built a great firm. I think they have a deep bench. Mark Rowan, which I met and know well, I highly respect. In a way, he transformed part of the annuity business landscape in the U.S. and the insurance world. And I'm sure, the board, the lawyers and the regulators have done whatever is necessary. Then, sometimes in life, you might be unfortunate. And, it appears that here there is absolutely nothing illegal being done. And if someone paid highly for tax advice, well, that's his, that's his personal problem, none of the company problem. I think in a way, the fact that they changed the CEO in a way, they led the operational running of the business to Mark, means in a way they understood that the public pressure was mounting, whether it's right or wrong. And so I think they're taking action.
Davide Serra, we're going to come back with him, and particularly his perspective from Milan on the challenges of Italian society and Italian government as well. On GameStop, I want to mention that we've gone out to new strength there, absolutely extraordinary, and what's called the drift of it intraday is really something, just mounting up a little bit of a pullback, then boom, up it goes again. 342 was 330 just minutes ago as well. Somehow that has to be a theme with Brian Moynihan, David Weston, in conversation with a gentleman from Bank of America, the ramifications of market volatility and derivative instruments to our major banks. This is Bloomberg. Good morning.
Focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops, infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Are you ready to announce today that you're running for president in 2024?
Well, that would really break some news. Your show would get more, a lot of eyeballs if we said something like that, David.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The euro has strengthened a little bit over the last few weeks and months, and that is something that, of course, we monitor very, very carefully. It's one of the factors, not the exclusive factor, but one of the factors that we take into account when arriving at our assessment of where inflation is going to go. And if the factor became too dominant in terms of threatening to derail our inflation objective, then, of course, we would have the tools available to counter that.
Well, that was Klaas Noot, the Dutch central bank governor, speaking to me a little bit earlier. Actually, we had a bit of euro weakness on the back of that interview once again saying they're looking at FX levels and they have all the tools available, he says, to counter any kind of euro strength. Let's get back to Davide Serra of Algebris. Davide, what does this mean for European banks? If you're a European bank and you're dealing with lockdowns, you're looking at the vaccination, it's taking a bit of time, and you also have the ECB that could cut interest rates further, where do you move to?
Well, I think, first of all, banks have one great advantage, that they keep on de facto booking revenues. You see, vis-a-vis many industries that need active sales, this is not happening. So if you are a fashion retailer or if you make cars, your top line is really impacted. As far as banking, this is not happening because, we live in the digital world and revenues keep on going ahead. There is a bit of less sales activity, but, markets are positive, people have been taking position, and hence actually the fee income and the trading income has been very positive. So I think the financials and particularly banks will come out as clear winner out of this pandemic. Secondly, I think at the same time, though, there are challenges, which is what are the losses that you'll incur on some of these loans, and we'll only know it at the end of 21 and 22. And hence, here we need to wait. Remember that though banks have received lots of moratorium out of governments, think about in the UK, think about across Europe, governments have given lots of guarantees. So those one won't be bank losses. Those one will be basically treasury losses. And hence, I think right now what banks are thinking are, how do we compete with digital champions? How can we have a level playing field? How can I upgrade and truly transform my organization to a digital organization? How can I manage my cost? I think these are the real challenges today. Pandemic, in a way, it's affecting and impacting less financial institutions. By the way, all the services are ongoing, all their activity are ongoing, so they are not being disrupted, as much as the real world.
Davide, when you look at UniCredit, so we have a new chief executive that should be appointed shortly. We also have Italian politics kind of being suspended, as we don't exactly know what kind of government we'll get. What's the way forward for UniCredit?
So, first of all, we'll see whatever the board decides today officially. But certainly, the UniCredit has lots of potential. I would say actually huge potential. Remember, it's one of the companies that trades less than 35 cents in a dollar vis-a-vis its book value. Its book value, even as the ECB says, is plenty of excess capital. Just the excess cash, it's around 40 cents and it's trading at less than 30, and plus there is an operating business. So I think there is massive value and clearly has to be unlocked. What it means to unlock it is clearly to bring it back on a sustainable path of profitability. Probably this year it's anticipating losses that it will see in the next 2-3 years, and then I think it will have a much better outlook. I think as a result, in my view, we are an investor, we're a shareholder, we have lots of capital in their additional tier one, and we believe in the fundamental value of that company. As far as what are the implications for Italian politics, I think Italy it's in a tough spot because global GDP it's down 3.5 as the IMF says. Italian GDP is down 9, so that's not great. And if you look at the mortality rate on COVID, we are among the top countries on a per capita basis, in par with the UK.
Right.
And hence, something has to be done, basically. And I think here, spending well the next generation fund and the 210 billion are key.
Davide, we got to leave it there. Davide Serra of Algebris, thank you so much, particularly on EU banking this morning. GameStop out to $365. It's come down $20, $345, but it is a well-contained series higher. It's a good day to speak to Dennis Gartman next.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
This morning, February 2021, well, it beckons for Chairman Powell. February 2020 is ever so distant. America is many millions from fully employed. The Fed will accommodate the Fed will plead for fiscal support from Secretary Yellen. Forget the securities analysis. Focus on revenue growth. Microsoft, they delivered. Norfolk Southern in 2 hours. Then Apple, Facebook, tech giant Tesla, all of them after the close. And what can be said about GameStop Corporation? You know I missed the entry point. You know I'm a boomer. Let's talk Gamma. This is Bloomberg Surveillance. Good morning, everyone. I'm Tom Keene in New York with Francine Lacroix in London. Yeah, we're going to get to Mark Cudmore in here.
Everyone's a boomer.
Gene Frieda, thank you so much for making the effort there, completely outside his remit at PIMCO. And Francine, to have Tracy Alloway and Eileen Burbage on at this GameStop moment was really good.
Yeah, and thanks to Gene Frieda, because actually he made us smarter, or at least me smarter, on the way to think about things when you just look at the dynamics with GameStop. Tom, if you put into context, look, GameStop, we look at the legality, we look at whether regulators are looking into it, and if something happens, whether it's too late. So there's like a million angles that we need to just try and take stock of on GameStop, and then we have the Fed today. Let's see if Treasury moves on the back of it.
Well, there's lots of news flow as well, but for those of you not wired into the derivatives market, and we're going to kill that in a moment with Mr. Cudmore, what is true of the history of this, and Francine, you sent me the note from Gaveka Research as well, and what's so important here is at the end of any of these derivative shenanigans, somebody's got to put in a cash injection. It can be the government. It can be somebody else. Yep. There's a point where money's got to go in to solve the derivative mess.
And that's really the heart of the questions that we're trying to get to the bottom of today.
Very good. And so we'll start on this in a moment. There's other news. With our first word news in New York is Ritika Gupta.
Thanks, Tom. Former President Trump appears headed for acquittal in his second impeachment trial. Only 5 Senate Republicans voted with Democrats to block a move to declare the trial unconstitutional. The 55-45 vote was probably serves as a rough proxy. It's well short of the 2/3 majority that would be needed for conviction. Senate Majority Leader Chuck Schumer says he's ready to move on a Democrat-only coronavirus stimulus plan next week. That's if Republicans continue to reject President Biden's $1.9 trillion proposal. A bipartisan group of senators made it clear an alternative backed by both parties isn't dead yet, though. The lawmakers agreed there's a need for a targeted relief package. And Fed Chair Jerome Powell is expected to maintain the central bank's aggressive support on the U.S. economy. That's despite having seen what he called light at the end of the tunnel from the coronavirus pandemic. Fed policymakers are all but certain to hold interest rates near zero when they wrap up their 2-day meeting today. And the UK is facing up to painful lessons after 100,000 deaths from the coronavirus. Last night at a press conference, Prime Minister Boris Johnson said he was deeply sorry for every life that has been lost. But Johnson offered few answers to the question of what went so wrong over the past year. The UK now has the world's 5th highest death toll from the virus. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. I want to get through this quickly as we wait on Mark Cudmore in Singapore. Futures -17, red and green on the screen. Tech lifts as well. Dollar not giving me much this morning. The yield space, not much information there. Dennis Gartman in a bit. Francine?
Yeah, Tom, I'm looking at, look, stocks are slipping before the Fed, so let's see what the conclusion of the first Federal Reserve policy meeting of the year is. If you look at, stocks in Europe, certainly they're edging a little bit lower because of some of the earnings. And then we had a bit of movement on euro also. This is after our conversation with Classic Note saying that they're looking at foreign exchange movements, and of course they have to deal with anything coming their way, Tom.
Great. That noise you heard across the Atlantic Ocean this morning was both me and Francine at the same time saying, get Cudmore. Mark Cudmore is at Bloomberg with some really quality knowledge on the interior dynamics of the market. Mark Cudmore, how does this end with GameStop? A lot of people talk about a liquidity injection, a cash injection at some point. Is that always the end result?
Well, I think the point is that it's a zero-sum game here. This is not about a company that's suddenly making much more profit. It's not suddenly getting more productive. This is purely about a zero-sum trading game. And that's part of the problem is people are seeing it as a game. And there are going to be some very, very big winners on the retail side. There are going to be some massive winners. Retail will have the biggest winners. It'll also probably in the end have the biggest losers. Does it end in some official liquidity injection? Probably not, for two reasons. One is it might be the institutions that suffer here, and because the amount of background liquidity that's been pumped into the system already, not because of some special event, they're getting their buffers of cash filled already. So this could go on for a long time. We could see a lot more of this dynamic in the months ahead because of all the liquidity that's coming into the system, which means that even when there's big losers, they get their kind of cash refilled quickly, whether it's through indirect support from central banks via bond buying, or whether it's direct via stimulus checks.
The book I want to bring out, folks, when you're a boomer like me and I'm getting, Reddit's tearing me to shreds and Twitter as well. They're leaving Francine alone, which is a good thing. Crushing Pharaoh as they should.
Well, for about 5 minutes.
Here's the Bible, folks. I want to mention this. Mark Cudmore and I had to wade through this. This is the glorious Sheldon Natenberg. This is the classic book on the 20 Greek letters. Mark Cudmore, explain gamma in English.
Well, essentially what gamma is it means that as we get closer to the strike, the central bank, or not central bank, sorry, the person who sold the option has to keep on buying more of the underlying. So what happens is when a retail customer buys a short-dated call, that's an option which has a lot of gamma. And as we get closer and closer to the strike, the gamma increases. What that means is the rate of change of underlying, the rate at which the person who sold the option must keep on buying more stock to stay hedged, starts accelerating. So what's happening at the moment in the Reddit space is you're having these punters who are buying very, very cheap, out-of-the-money, short-dated options. And at that point in time, to hedge your option, you do not have to buy much of the underlying if you sold it. But as we get closer and closer to strike, you suddenly have to buy a lot more rapidly. And that's why we're seeing this kind of these kind of extreme skew in moves that we basically get acceleration on the top side once they start breaking out. But there's an extra dynamic here. Normally in markets, if you're an option market maker in most of markets, or in an institutional market, normally when you get these overshoots, you don't panic because it's like, okay, well, we'll return to a fair value, an anchor value, and you don't kind of chase the losses in. What's happening at the moment is banks don't know when it's going to stop because they can see that on Wall Street Bets, on Reddit, etc., that these people are saying, let's push it higher, let's go again. And what's happening is now, rather than kind of backing off when these markets overshoot, the institutions are starting to panic and having to buy up more, and then you're getting a short squeeze as well. So there's a massive kind of short gamma squeeze that's happening here that's playing into a short squeeze of people who are generally just short the underlying. And it's hard to know at what point you think is too far because it can keep on going a lot farther still.
Mark, how does this actually change markets going forward? So, we're looking into the legality, there could be regulation, but could this be replicated in other instances?
I mean, already the legality point, I'd recommend reading an article from our colleague Matt Levine yesterday, which is outstanding on this, and he has a legal background around this area. And as he says, it's kind of very grey issue because no one's lying about what they're doing here. They're openly pumping the market, and it's a little bit of a novel space. What does it mean for markets going forward? I would suspect we've got a lot more of this. I mean, again, a lot of people have made these comparisons to the dot-com era, but if it's like the dot-com era, we're going to have, we're in the early stages still. We're not at the end stages. People aren't blowing up on this yet. What happens is we might have months of volatility. A lot of people argued that the VIX was too elevated into the end of last year and was going to come lower, especially with all the liquidity in the system. I'm not sure we're going to see the VIX come lower. I think we're going to see the VIX stay elevated, just like we did back in the 1999-2000 era. So I think volatility is one of the conclusions we're going to get. And I think we're going to get some more random moves in equity markets. Is it going to translate into other markets? It's less clear. I think it's much harder in, say, for example, FX markets, there's such deep liquidity. It's harder for a small retail base to kind of have such power over it.
Mark, thank you so much. Smart. Mark Cudmore there, Bloomberg MLive managing editor, joining us this morning on GameStop. Now, here is the JP Morgan Asset and Wealth Management Chief Executive, Mary Callahan-Erdoes, on bubbles in general.
You have natural froth in the system, and there's only so much you can do about it. Now, that causes all sorts of bubbles. Asset bubbles come and go, and there's lots of conversation about things like Bitcoin and SPACs and GameStop and other companies and what's happening. Those are asset bubbles, much like the crisis of 2000. And those they can end badly, but they don't affect the actual economy. They don't affect the actual banking system and the stability and the security that we're talking about here.
Mary Erdos there on the challenges of the time. That was a very good panel that Francine had yesterday. Right now, and it's always a good time to talk to Dennis Gartman, yes, chairman of the University of Akron's Endowment Fund and beyond retired. But this morning, it's really special because permeating the work of Gartman in his 15 years of studying Wall Street is history. And right now with GameStop, there is a repeat of history. There are any number of research notes, Dennis Gartman, that liken this back to the buildup of derivative and leverage bets of LTCM, and some will even go back to 1907 in J.P. Morgan. You and I have both been in that hallowed room at the J.P. Morgan Museum on Madison Avenue. Cohn and Griffin of hedge fund fame have come in and bailed out a hedge fund, short GameStop that's wrong. Are we seeing history repeat itself?
This is a repeat of what we saw in 1902 when the Northern Pacific Railroad was squeezed by Kuhn Loeb, by Harriman, by, I'm trying to remember the name of the other fellow that was involved in that squeeze, but the stock went from $40 to $1,000 a share. It came, that was when we had that great comment that was made, he who sells what isn't his'n must buy it back or go to prison. And that's what's happened. We have the most amazing short squeeze going on. I've lived through a short squeeze in wheat. I've seen short squeezes at the turn of the century, but this one is 1902 revisited. This is unbelievable. The public is making money, but the problem lies in the fact that with as many hedge funds as being caught short, and watching to this morning, what we traded $335, $340, $350 a share in GameStop, which was trading $60 a share a mere week and a half ago. You're going to have selling in other areas, and look what's going on in the Dow this morning. We got the Dow down, 150 points, because hedge funds that are caught short are having to sell other stocks to raise cash. This is a very serious circumstance right now.
Dennis, you and I remember the sweat of August of 1998, where all of a sudden it wasn't a parlor game of people with fancy suits and ties driving Ferraris or Maseratis. What this comes down to, Dennis, is at some point it rolls back onto global Wall Street. Do you anticipate this here, or can they keep this discreet to a few recalcitrant hedge funds?
I think it's going to be, I think it has wider implications than a few recalcitrant that easy for you to say, recalcitrant hedge funds. There's a number of stocks out there that are heavily shorted. We've got a lot of people talking about the fact that so many stocks are shorted. The public is coming in on Reddit. The public is coming in on Netflix and things like, well, not Netflix, but coming in on other internet. I'm lost for a word right now because I'm caught with what's happening. It's just astonishing to watch. But this has wider implications for the near term. I think that I think you're going to see a number of hedge funds declare bankruptcy in the next several days. And given a new administration that has tendency to overregulate, we'll use this as a reason to overregulate Wall Street again. Add to that the SPACs, the circumstance regarding SPACs, and you have the implications that are, I think, far more serious, no question.
GameStop with a pullback, folks. This is the actual pro chart from the Bloomberg terminal. It's not TV beautified, but that's actually what everybody's looking at here. Dennis Gartman, what you mentioned is Gary Gensler is going to be the most important person in the Biden administration. It always, always, always happens. You and I have read the books where re-regulation comes in. How do they re-regulate? Excuse me, how do they re-regulate the new technology? How do they regulate Robinhood?
Good question. Better beyond my ken to be able to answer. All I know is that they will attempt to do something. I have no idea what they'll attempt to do. All I know is that they will attempt to regulate and stifle trade. That's just the implication. That's the ultimate that comes of this. How they do it, really quite beyond me at this point. I'm just worried that it'll bring in more government intervention than we had ever thought possible. This couldn't happen at a worse possible time.
But Dennis, how was this allowed to happen in the first place?
Well, first of all, it was free market trading. I mean, people have a right to be short of a stock if they wish to be. That you can't stop them from doing that. I don't see anything that was untoward, ill-advised. Well, I shouldn't say that. It was untoward and ill-advised, but I don't see anything that was illegal. You have every right to be short of a stock if you think it was overvalued. And was GameStop overvalued at $60 a share? Yes, absolutely.
Get this banner up because Francine Lacroix, folks, just asked the pro question. How did this happen in the first place? I happen to be reading, Dennis, right now Chernow's one volume on Grant. There was a panic of 1872, a panic of 1837, and we mentioned 1907 earlier. The answer to Francine's money question is it's the human condition affected through the new derivative market, right?
Yeah, I mean, they had every right. People had every right. Hedge funds had every right to be short of GameStop, but they should have known the fact that there was more shares of GameStop shorted than existed in the free market. Anytime you do that, it's going to be impossible. It's going to be I shouldn't say impossible. It's going to be extraordinarily difficult to borrow back that which you had sold short. And the fact that probably along the way, hedge funds sold it at 50, they sold it at 60, they added to it at 80, they added to it at 120. Adding to a losing trade is what caused them to have these egregious problems that are going to demand the government step in and do something. Should that happen? Government has to come in and do something, but I'm afraid that this is going to give them the reason to be far more expansionary than they ever dreamt possible.
I was recalcitrant and not mentioning that Dennis Gartman will stay with us, and we're thrilled that he will do that today. I want to just shout out our team. Francine, they are killing it with this move from 147 up to 300 to go from Tracy Alloway to Eileen Burbage onto a guy named Gartman. Francine, we're sitting here, Francine, fat and happy, having our coffee, and, I know you're having, your morning Bloody Mary and all that. That's great. But our team is killing it, bringing you information on GameStop. We're going to continue with Dennis Gartman.
Fat and happy. That's how we roll, Tom.
It's how we roll. Dennis Gartman with us today. Gets better later on. Bob Prince of Bridgewater Associates. You think you got to rip up the script with Mr. Prince? I would suggest so. Stay with us. This is Bloomberg. Good morning.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar